Good morning, everybody. Mrs. Secretary of State, Chairman of the Board of ATIDI, Mr. the CEO of ATIDI, the Board of Directors of ATIDI, members of the Diplomatic Corps, shareholders, distinguished guests, ladies and gentlemen, bon dia a todos, bonjour à tous et à tous, good morning everybody, and be very welcome to the third and final day of ATIDI's 25th Annual General Meetings right here in Luanda, capital of one of Africa's fastest growing economies. Over the past 2 days, we've exchanged bold ideas, forged new partnerships, and laid the groundwork for a more connected, confident, and capital-strong Africa. And today we bring it all together. We shift into action, sharpening our focus on how we reduce the cost of capital and unlock new pathways for financing growth across our continent. And to officially open this morning's program, it is my absolute pleasure to welcome on stage the Chief Executive Officer of ATIDI, Mr. Manuel Moses. Round of applause for Mr. Moses.
Good, as usual, when I get to the stage, the mic has to be adjusted for height. So, Your Excellency Josiane Cristiano de Souza, ladies and gentlemen, honorable distinguished guests, members of the media, ladies and gentlemen, bon dia. I am so happy. It's my privilege and a pleasure to welcome you all to the 12th Annual ATIDI Investor Roundtable here in Luanda, Angola. Let me begin by extending our sincere thanks to the government of the Republic of Angola for graciously hosting this year's event and for your continued commitment to regional integration, economic transformation, and your partnership with ATIDI. It is truly wonderful to be here in this vibrant city. And as someone named Manuel, I always say I was destined to come home and to feel home here in Angola. Even my name sounds local. I wish I could speak a little bit more Portuguese. I look forward to this important conversation ahead and to the new connections that we will build as we work together to unlock the potential of our beloved continent. Since its inception, ATIDI has grown from a monoline political risk insurer into a comprehensive provider of risk mitigation solutions. Today, our offerings extend well beyond political risk to include credit insurance, the Regional Liquidity Support Facility, RLSF, the support for SMEs under our POSA initiative, and many more. This evolution reflects our responsiveness to the challenging or to the changing priorities that our member states and private sector demand. As at the end of 2024, ATIDI had facilitated over $88 billion in trade and investments across the continent, which is a clear demonstration of the impact and the well-structured risk, what the impact of well-structured risk mitigation tools can do in unlocking the potential of our continent. Despite the progress made, we remain acutely aware of the scale and the challenge ahead of us. Africa continues to attract less than 4% of global foreign direct investment, as we call it FDI, with a significant concentration in extractives and infrastructure, leaving many sectors underserved. This is precisely why we are here at this investor roundtable, so that we can explore through this platform how to broaden investments channel investments into the diverse areas and potentials that we have. This year's theme, which is turning risk into opportunity, securing a sustainable future, captures the very essence of ATIDI's mission. Our role goes beyond underwriting risk, enabling solutions, but by transforming the ambition into bankable outcomes, we help to unlock progress that improves lives, drives prosperity, and secures Africa's long-term development path. As we turn into today's discussions, our panels will delve into critical issues shaping Africa's investment landscape and the macroeconomic forces that are at play, the structural reforms that are needed to unlock capital at scale. In our first panel, we will explore Africa's macroeconomic outlook, rising premiums, and the persistent challenges across the affordable capital, to access affordable capital. The second panel will focus on the foundational elements that build investor confidence, including regulatory development. I think I've lost the mic. Okay. Capital markets development and the role of blended finance. Countries like Angola have made commendable progress in modernizing financial governance. However, across the continent, regulatory fragmentation and the lack of risk-sharing mechanisms continue to limit the flow of capital. This is where instruments such as insurance wraps, credit enhancement, structured finance solutions, like those offered by ATIDI, must be mainstreamed to help close the bankability gap and mobilize funds at scale across Africa. Angola holds a unique and a valued place in ATIDI's membership. As a nation with growing regional influence, a reform-oriented government, and a strong commitment to investment-led development, Angola is shaping Africa's future. A powerful example is the Beta project. This is a water supply project which was a landmark for ATIDI, valued at 1.1 billion, aimed at delivering sustainable drinking water to nearly 2 million residents in the province of Luanda. ATIDI's risk mitigation solution support was instrumental in unlocking long-term concessional funding for this transformational project. It stands as a clear demonstration of what it means to de-risk development, making it essential infrastructure projects bankable and accessible and resilient. There could be many more examples coming out of these panels. Looking ahead, ATIDI is eager to support Angola's broader infrastructure and regional integration ambitions, particularly the transformative Lobito Corridor. The multi-country initiative holds immense promise to boost trade, catalyze industrial growth, and generate employment across the strategic economic corridor linking Angola, Zambia, and the DRC. The goals of the Lobito Corridor strongly align with ATIDI's mandate, and we are actively engaging with the public and the private sector partners on how insurance solutions, credit enhancements, and de-risking tools can help to build this vision into a sustainable reality. Africa's future will not be built through risk aversion, but through bold, informed, and strategic investment with risk. It is time to reframe the perspective, to see risk not as a barrier, but as a catalyst for innovation, collaboration, and long-term value creation. This is the very foundation on which ATIDI was established, to turn risk into opportunity, to help Africa's achieve its full investment potential. True strength of this roundtable lies in the diversity of thought, experience, and perspectives gathered here today, those in the room and those who are online. By harnessing this collective insight, we can chart a path that strengthens sovereign resilience, unlocks private sector potential, and lays the foundation for a sustainable and prosperous Africa. Muito obrigado. Thank you very much.
Thank you very much, Mr. Moses. Or shall I say, muito obrigada, Sr. Manuel. Now I will only address you in Portuguese. Thank you very much for such a powerful address and also this strong call to action to get into full gear and unlock the potential of our continent in a sustainable and bold way. And now it is my great honor to invite to the stage the Secretary of State for Budget of the Republic of Angola, Mrs. Jussiane de Souza, representing this morning the Honorable Minister of Finance of the Republic of Angola. Let's all welcome Mrs. de Souza very warmly.
Excelentíssimos membros do Conselho de Administração da ATIDI, distintos convidados, minhas senhoras e meus senhores, muito bom dia. Em nome do Governo de Angola, é para mim uma grande honra dar-vos as boas-vindas a Luanda para a mesa redonda de investidores e sessões de alto nível da 25ª Assembleia Geral da ATIDI. É um privilégio acolher esta Assembleia de alto nível, dedicada à promoção de um diálogo construtivo em torno do investimento, da mitigação de riscos e do desenvolvimento sustentável do nosso continente. Angola vive hoje uma dinâmica de transformação da sua economia, marcada por reformas estruturais, pelo reforço da confiança dos investidores e por um compromisso firme com a cooperação regional e continental. É com satisfação que partilhamos este momento convosco. O tema da Assembleia Geral deste ano, transformar o risco em oportunidade, garantir um futuro sustentável, é simultaneamente oportuno e mobilizador. Reflete o papel essencial que instituições como a ATIDI desempenham ao permitir que os países africanos enfrentem incerteza, mobilizem capital e impulsionem o crescimento inclusivo. Ao longo das 2 últimas décadas, a ATIDI tornou-se um pilar do ecossistema de desenvolvimento africano, oferecendo soluções inovadoras de mitigação de risco, desde seguros contra riscos políticos até instrumentos de reforço de crédito, sempre alinhados com as necessidades em evolução das nossas economias africanas. Minhas senhoras e meus senhores, o ambiente de investimento no nosso continente tornou-se mais complexo e exigente. a aversão global ao risco, as restrições de liquidez, os choques climáticos e os constrangimentos estruturais cruzam-se hoje de forma desafiante, colocando à prova as abordagens tradicionais ao financiamento ao desenvolvimento. Neste contexto, a mitigação de riscos deixou de ser uma preocupação periférica. É hoje central na forma como atraímos, estruturamos e sustentamos o investimento. Instituições como a ATIDI não são apenas prestadoras de seguro. São geradores de confiança, facilitadoras de viabilidade financeira dos projetos e impulsionadoras dos mecanismos híbridos que caracterizam o investimento transformador em África. Ao iniciarmos esta mesa redonda, encontramos-nos num momento crucial, que exige pensamento lúcido, ideias ousadas e uma vontade coletiva de agir. As sessões que se seguem oferecem-nos uma oportunidade singular para explorar estratégias práticas e escaláveis, ancoradas nas realidades africanas e orientadas para a resiliência, para a criação de valor e a sustentabilidade ao longo prazo. O modelo de atuação da ATIDI, assente em parcerias com governos, instituições financeiras de desenvolvimento, bancos comerciais e investidores privados, tem sido determinante na criação de condições para um progresso inclusivo e duradouro, tal como anteriormente referenciamos. Angola orgulha-se de acolher esta plataforma de colaboração e de contribuir para a construção de uma visão partilhada de transformação económica. Convido assim todos os participantes a aproveitarem plenamente esse espaço, escutando com atenção, questionando com profundidade e construindo pontes entre a ambição e a concretização. Muito obrigada pela vossa presença no nosso país, pela vossa visão e pelo vosso contínuo compromisso com o futuro da África. Bem-haja.
Another big round of applause for Mrs. the Secretary of State. Muito obrigada, excelentíssima Secretária de Estado, pela sua intervenção poderosa e também um lembrete de que o futuro da nossa África se constrói com uma visão bem clara, união e também coragem. Mais uma vez, agradecemos. And now we transition into the first high-level discussion of the day, a roundtable that will explore the macroeconomic landscape, the risk premium in African markets, and what it will take to shift perceptions and unlock greater investment flows into the continent. And to guide us through this crucial discussion, I'm absolutely delighted to hand over to someone who knows the terrain, I want to say, inside out. Please, let's all welcome the Managing Director of African Business, Mr. Omar Ben Yedder.
Business Magazine. I'll be the facilitator rather than a moderator. Today's roundtable discussion really is exactly what it says. It's a discussion with all of you. So we're going to have a presentation to set out a macroeconomic perspective of where we are today and some of the headwind risks that one is facing. And then we're going to have some lead discussants setting the scene before opening up the floor for comments, and feel free to challenge what's been said, feel free to compliment what's been said. So someone once told me that life is unfair and you don't get what you deserve, you get what you negotiate. So what we're here to do is actually improve the conditions so that we can negotiate better and strengthen our bargaining position. A golfer also once said that the harder I work, the luckier I get. And really, we're here to all work together and in a collaborative fashion to bring together solutions that will ultimately help reduce the cost of capital and increase capital flow to the continent. I think those are the two overriding objectives of the discussions. So the minister yesterday said that risk is ever present and we can't get rid of risk. But she said three things. She said risk needs to be understood, which is what we're here to do today. And we'll have, again, that presentation from Gabrielle Reid, Head of Advisory at Pangea Risk, to help us understand what the risks are today and what those mean for the continent. She said that risk needs to be shared. I think that's what ATIDI is trying to do by sharing the risk, but sharing risk that is understood and managed wisely. So again, what we'll want to know is how are you managing risk? How are you taking your clients to the market, and how is the market responding to those risks? So I think yesterday there were other calls for actions in terms of being enablers of confidence, which again we'll have Samira Mensah, who's the managing director at S&P Global, who'll be able to tell us the fundamentals of African risks and ultimately how we can create greater confidence in the market. Bold thinking, agility, and unity of purpose. We've got Shwan beside me here from Lazar, who's a sovereign advisor. We've also got Takunda from Rand Merchant Bank. So they'll tell us about some of the innovations in the market that are taking place and some of the thinking around the instruments that they're putting out there and some of the solutions and structures that are working. And finally, we'll have Annabelle Buzungu from ATIDI telling us about, responding or giving us her thoughts on what's been said, and also what ATIDI is doing in the market, again, to reduce the cost of capital. The Secretary of State spoke about insurance wraps and guarantees, so what's working and success stories that we can hopefully scale and replicate across the continent. So without further ado, I'd like to call upon Gabrielle Reid from Pangea Risk to make her presentation and let us know what the global macroeconomic environment is like today and some of the headwind risks. But ultimately, we're talking about how to turn a risk into opportunity. So by better understanding those risks. Thank you.
Do we have sound? Yes, we do. Thank you, Omar, and thank you to ATIDI for this opportunity to speak to you all. I've been tasked with setting the scene for today's discussion and providing a high-level overview of Africa's macroeconomic landscape. Not exactly a small task to do in under 10 minutes, I think is my time. But before I start this whistle-stop tour of Africa, I wanted to begin with looking at the global... Clicking? Not yet. There we go. On the global environment, which I think is a really important starter for any discussion around Africa's outlook. Global economic prospects are weakening. We see substantial barriers to trade. We've got tighter fiscal conditions, diminishing investor confidence, and heightened policy uncertainty, which are projected to have adverse effects on global growth. In fact, the World Bank has projected global growth at 2.3% in 2025, and this is down from a 3% projection made earlier this year. Heightened geopolitical tensions, as well as commodity market volatility, have weighed on global economic prospects. And these have the potential to undermine Africa's economic outlook and exacerbate debt vulnerabilities. One of the key drivers of this uncertainty has been changes to US tariffs and trade policies. Historically, US trade policy was really rooted in multilateralism. This provided broad-based government-promoted predictable trade policies. In contrast, what we're seeing now under the America First strategy of the Trump administration is a shift, a departure from this broad-based approach, redefining international commerce by placing tariffs and bilateral negotiations at the heart of US trade policy. Now, for emerging markets, this is not necessarily a new position, but it's a pattern around changing trade relationships that have been in place for a while. But perhaps this really cements the need for trade partner diversification, as well as trade relationships are now shifting. And perhaps trade relationships once taken for granted are now less certain. Not least, the African Growth and Opportunity Act, which has long served as the foundation for US engagement with countries like Kenya, my hometown, South Africa, as well as Nigeria, granting them preferential duty-free access. Now, with the shift to bilateralism, the future of such legacy agreements is more than uncertain. So when we look at the tariff policies, I think it's fair to say that it's going to impact different countries differently. Looking at the shading of that map, which shows the proposed tariff policies from the Trump administration specific to the African continent, I think it's clear to say that there's darker shading towards the south. In Southern Africa, South Africa is the US's largest trading partner, and they face a potential 30% tariff on key exports, including automotive parts, steel, and agriculture products. This could impact South Africa's industrial competitiveness and export earnings. Lesotho, perhaps sometimes forgotten from the discussions, is facing a potential 50% tariff, which would severely impact its textile sector. Textiles represent more than 10% of GDP in the country, but more importantly, it's a sector that underpins most private sector employment. These measures have the potential to impact job losses, export revenue declines, and deeper recession pressures. East Africa, however, possibly presents a different picture. Kenya is facing the blanket 10% tariff and has no US trade deficit. In fact, in 2024, exports from Kenya to the US were above $1.5 billion, 60% of which was textiles. Now, there is an opportunity here, of course. With risk comes opportunity. Kenya could reposition itself as a possible sourcing alternative to Asia, given this factor. However, they do need to account for potential higher operating costs domestically. The DRC is also using its proposed 11% tariff as a leverage, looking to leverage its strategic critical mineral reserves as a way to gain geopolitical dynamics. Ethiopia in East Africa, though not necessarily one that's coming up particularly dark red on the map, is particularly vulnerable. In 2023, exports from Ethiopia to the US totaled upward of 500 million, but this was primarily apparel and coffee. Yes, Ethiopia is said to only face the blanket 10% tariff, but textiles and coffee in general are low-margin exports. With a trade deficit upward of 12 billion to the US and limited foreign reserves, Ethiopia is facing mounting pressure on the national bank's currency management. Falling export revenues could derail the country's fragile debt restructuring process. But I think in general there's a broader impact here, and that the US tariffs are accelerating efforts among African and other emerging market states to diversify not only trade partners, but to ensure that they reduce over-reliance on any one single market. And this has already been happening. Amid US policy unpredictability, but the longer-term global supply chain realignments, Africa is deepening its partnerships with emerging partners like China, India, the UAE, Turkey, and others. These actors are investing in logistics, energy, digital technology, and physical infrastructure, all sectors that align with Africa's development goals. We just look at trade as a single metric of this. China-Africa trade is surpassing 280 billion. This is 4 times US-Africa trade. In the map, the shading just shows where China sits higher as an export partner than the US, not necessarily that it's the main export partner in that country. But they're not the only ones playing on the continent. We're also seeing increased investment from Gulf states, who have invested over $100 billion in Africa in the past 10 years. 73 FDI projects alone to the fee of $53 billion were signed in 2023. Intra-Africa trade is also on the rise. We see that intra-Africa trade has surpassed $192 billion, growing 7.2% year on year in 2023 versus 2024. And this is, of course, going to be supported by the Africa Continental Free Trade Area integration. African trade is projected to grow by 5.1% both in 2025 and 2026. So what this diversification means is that Africa's economic outlook remains somewhat positive despite global headwinds. Now, specific GDP projections obviously vary slightly across the sources, but in general, Africa is consistently seen as growing as the second fastest growing region, second only to Asia. GDP growth on the continent is placed between 3.8% to 4.2% between 2025 and 2026. This growth and resilience is really underpinned by ongoing investment in infrastructure, policy reforms, and trade expansion. But more needs to be done to bridge Africa's financing gap that hinders economic development and progress, and obviously hinders progress towards the Sustainable Development Goals. Again, while this is a positive picture, there is some regional variance we need to be aware of. East Africa really leads in terms of growth, with projected growth for the region forecast to be 5.7% in 2025, with Ethiopia, Rwanda, and Uganda set to post over 6% growth in 2025, according to the IMF, and more than 7% growth in 2026. Kenya and Tanzania are, of course, also major drivers of growth in the region, not least given their infrastructure investments. West Africa presents a little bit more of a mixed picture. Here we've got a region at 4.4% in 2025. This is obviously supported by economic reforms in countries like Nigeria. We're also seeing stable growth in Côte d'Ivoire and Benin. That spike for Guinea is obviously in anticipation of bringing mining revenues online off the back of the Sindamount project. And Senegal's economy is also set to grow by 8.4% in 2025. This is really underpinned by boosted oil and LNG production. But financial gains are somewhat limited from a government perspective in the country due to limited revenue shares from these industries. And to strengthen finances, the Senegalese government is looking at potential subsidy cuts, workforce audits, as well as possible tax hikes. Of course, from a debt position, Senegal also paints quite an interesting picture off the back of the discovery of undisclosed debt of around $7 billion, pushing the 2023 debt to GDP ratio from around 74% to 99%. And of course, this did result in February downgrades for the country and will be a cornerstone of any resumed talks with the IMF on a new program. Also in West Africa, some interesting developments here that we're watching very closely is, of course, Niger, Mali, and Burkina Faso's exit from ECOWAS. And this has resulted in uncertainty in the region. The Alliance of Sahel States, or AES, has finalized its coordinated withdrawal from ECOWAS now, and this has really exposed some institutional fragmentation within the bloc and reigniting unresolved questions around financing liabilities. The new bloc, the AES, is also seeking to assert monetary sovereignty through the creation of a new central bank and is speaking around moving away from the CFA franc to have an independent currency. Of course, this is hindered by the absence of credible central bank structures at this point and constrained fiscal capacity. All the while, these countries are also facing security concerns, which I'll flag in a bit. Southern Africa, rather, is showing really modest growth. The region is due to grow by 2.6% in 2025. Zambia is really the driver of this, anticipating to benefit from rising mining revenue and improved agricultural yield. Angola somewhat subdued due to ongoing pressures around global oil prices, with South Africa really experiencing very limited economic growth. Latest figures are there at 1% for 2025. The government figures put that at 0.8%. Central Africa is set to grow by 4.2% in 2025, with the DRC really driving much of this growth off the back of critical mineral demand. So what does that then mean from a sort of inflation and monetary policy perspective? I think it's fair to say that some African countries have really been grappling with high inflation for several years. As of 2025, there is optimism that inflation across Africa is set to reduce, with some figures placing the regional inflation from around 19% to drop down to 14%. Again, this is varied across the continent. We see South Sudan, Ethiopia, Egypt, and others really drive this anticipated inflation drop, driven by stabilization, reforms, and improved harvests. But global interest hikes, geopolitical tensions, commodity volatility, and the potential for renewed conflicts could worsen borrowing costs once more, and inflation pressures could rise, especially through food and energy prices, which of course dominate household spending across much of the continent. Central banks in sub-Saharan Africa have raised rates to stabilize currencies and control inflation, but limited policy space and some weak credibility in certain markets makes tightening more risky for growth and recovery. Finally, political instability, conflict, and terrorism, particularly in the Sahel, Sudan, and the DRC, and with rising tensions in Ethiopia, continue to threaten economic stability and regional integration. According to the Afrobarometer survey of 2024, less than 30% of Africans in the 39 countries that were surveyed believe that their governments are handling job creation or economic management effectively. Governance has stalled in several jurisdictions and has worsened in others. As one metric of this, between the year 2000 and 2002, Africa saw 123 forceful changes of executive leadership. This contributes to less predictable policy environments and heightened non-tariff trade barriers. Security concerns and governance uncertainty also raise investor risk perceptions, curbing trade opportunities and increasing borrowing costs. As it stands, African sovereigns and corporates face between 2 and 8 times higher borrowing costs than their peers in advanced economies. To conclude, Africa holds major opportunities, not least due to the global green energy transition, as well as a push to diversify supply chains. But realizing these requires reducing trade barriers, improving logistics and regulations, and investing in both physical and digital infrastructure, alongside improving governance. Sovereign lenders, financiers, and insurers, many of you in the room, play a key role in bridging Africa's financing gap by providing risk-adjusted capital and insurance solutions to unlock growth. We can hopefully better manage political, market, and operational risks. Thank you.
Thank you so much, Gabrielle. So some interesting stats, and we'll share the presentation with all of you. So what we saw, obviously, in terms of trade, we saw that trade with other emerging markets, such as China, are increasing. But what's also interesting is, and we'll hear later on maybe from some of the investment banks here and some of the other DFIs here, but when we're going to raise capital, we're also going and raising capital now on other markets such as Panda bonds and Samurai bonds, and getting a much lower yield, or paying a much lower yield than what we would on the normal Eurobond market. So it'll be interesting to understand how that's working, and whether we can not just see increase in trade, but increase in institutional investors taking an interest from those markets in African paper. So without further ado, I'd like to call upon Samira Mensah, who's the Managing Director of Research and Analytics for Africa at S&P Global, to talk to us about some of the fundamentals of African risk and what we can do ultimately to better sensitize the market to understand that risk, and hopefully work for better and more prudent economic management, so that we can lower the cost of capital. Thank you.
Thank you very much, Omar. Very good morning, everyone, and all protocol observed. I really appreciated, actually, that presentation from Gabrielle. I think it really set the scene really nicely. with some numbers that we can remember, of course. And it will help, I suppose, the debate going forward. So at S&P Global Ratings, out of the 54 sovereigns in Africa, we rate about half of them, 26. And we took more than 10 positive rating actions in 2024 last year, which is more than the double that we took back in 2023. That being said, the picture is certainly mixed, and I think it reflects certainly the presentation that we've just seen, knowing that on the continent, economic trajectories are certainly diverse. And generally speaking, I think it's fair to say that we start from a low base of economic development. But some African economies actually are experiencing a robust growth trajectory, while others continue to muddle through and face hurdles when it comes to GDP growth, inclusive and sustainable economic growth, feeding, of course, directly into debt levels and high servicing cost. A few factors are indeed important, and I think the previous presentation really reflected some of these key credit factors fundamentals. The first one is, of course, macroeconomic fundamentals, which are central in shaping up sovereigns' creditworthiness. For 2025, we forecasted at the beginning of the year, actually, that the African economies will grow by 4.8%. We have revised that forecast to about 4%, which sits exactly right in the middle of Gabrielle's range, right? If you compare that to 2023 growth number, it was 4.4% back then. So it's not like a massive change. It is still upward. It is still higher than the world GDP growth number, which will average at the moment 3% in 2025. So it's good, but it's not a game-changing factor, particularly when we know what the debt levels are and what is the cost of financing and the sort of challenges that African sovereigns meet in terms of just growing their revenue base. So the African continent has experienced improved macroeconomic trajectories, though, over the past decade. At the same time, prospects have not been even across. SA's economy is set to grow at 1.3%. Senegal's economy is projected to grow at 8.5%, going back again to the previous presentation. So the stories are not the same, and the performance at the top level, so the top line, is really important because it feeds straight away into government's ability to generate revenues to then, of course, pay their current expenditures, but also invest in infrastructure and development projects, and of course, pay and service the debt. And so when we have weak growth levels, it means that debt to GDP ratios are, of course, impacted, often leading to increased borrowing costs, or increased borrowing levels, actually, to finance these infrastructure projects. Currency and exchange rate risk are certainly factors that could create a vicious circle in a context of shorter, we believe, credit and economic cycles. And I think we've seen that back in 2015 with the last, not the last actually, it wasn't the last price oil shock, but it was certainly one event that led to oil price volatility, 2020 with the pandemic, 2022 with the invasion of Russia into Ukraine, the subsequent inflation shock, and of course the tariff uncertainties with the new U.S. administration. So certainly we have a sort of a cycle of events that tend to make economic cycles and credit cycles shorter. and also difficult to predict as far as, projection baseline is concerned. Inflationary pressures and monetary policy settings affect also real debt burdens, as central banks try and tend to raise interest rates when you have macroeconomic instability, thus affecting directly actually government domestic cost of borrowing. And so these elevated debt levels that have, of course, started at different periods for different sovereigns, when combined with wide fiscal deficits and weak revenue generation, compound credit risk factors in times of external shocks or natural catastrophe events. What's more, of course, we look at the nexus between high sovereigns and bank nexus risks, because high budget deficits tend to lead to lower credit intermediation into the private sector and crowd out the private sector from the domestic markets. Perhaps lastly, institutional and governance challenges manifest during these external shocks, and our assessments of sovereign institutions is underpinned really by policy credibility, which in turn supports sustainable growth and public finances, because ultimately our credit rating speaks to the ability and willingness, true, of sovereigns to meet their debt in full and in time. Low institutional capacity increases vulnerability to shocks and reduces investors' confidence. African sovereigns are particularly sensitive to shocks such as commodity price volatility, as I explained, global credit conditions, of course, as they tend to have a high share of their debt denominated in foreign currency. And this is because actually of their economic structures and the lack of fiscal and external buffers that could prevent or shield them during these times of external shocks. To conclude, as global debt level continue to rise, sovereign debt liability management operations that we have seen over the years will become more frequent. Since 2020, a rapid increase in government debt levels tied to successive external shocks has pushed sovereign to undertake debt liability management exercise to address upcoming redemptions. While the majority of these events, transactions, are initiated to really be proactive in managing their debt liability duration, if you will, ahead of time and minimize refinancing risk, sorry. Other may represent actually a mean to circumvent default scenarios. Debt buyback, foreign and local currency debt exchanges, debt for nature swaps, generally all aim actually to reduce refinancing risk and mitigate these risks, particularly at times of fairly high global credit conditions. So the price of US dollar funding being essentially underpinned by the Fed rates and the ECB rates. Ultimately, and perhaps to kick off the discussion, Omar, here, ultimately, I think, strengthening macroeconomic policies and debt management, improving institutional capacity, supports investor confidence and portfolio flows that feeds into the domestic capital markets. And I think South Africa is one example where we have a capital markets that is absolutely deep and liquid, thanks to a fair amount of NBFI, representing about 200% of the GDP of that country. And portfolio flows are extremely important for that country, for instance, to manage liquidity and fund the private sector. In this context, institutional investors, banks, pension funds, insurers alike, would be more willing to channel investments to the benefits of the private sector, while multilateral development banks provide financial solutions that mitigate market risk stemming from these global credit conditions that I alluded to. As financiers of infrastructure projects, MDBs and NDBs, national development banks as well, are essential contributors to the GEM risk database. I'm sorry. The GEM risk database is certainly something that we are looking forward to leverage on as a credit rating agency, because it helps us essentially enhance the data we use to rate private transactions, infrastructure projects, and more granularity is being brought in through the GEM database on loss given default of infrastructure projects that are financed by these MDBs and NDBs. Not everything is sort of a clear cut, but certainly the contribution of enhancing the data across our African projects will help us also contribute to better credit ratings ultimately, particularly on these infrastructure projects. Thank you very much.
Thank you, Samira. So Samira is married to someone from Benin, and I won't put you on the spot, Isabella, but maybe you'll tell us a little bit about how ATIDI did some risk profiling for Benin. And actually, the gentleman next to me is also from Benin. So both of them will be interested, at least in terms of what you've done in terms of reprofiling Benin's debt. And I think Benin is actually a great example of a sound macroeconomic management and predictable policy making, clear vision, and hence why the market is keen on their paper. So maybe we'll go to Schwan next, then also from Benin, to tell us a little bit, but also from Lazare, so sovereign advisor, to tell us about the market appetite for African paper, what you're seeing from the market, and also your take in terms of ways forward, and also the role of DFIs. I think Samira mentioned it, but we're increasingly seeing DFIs playing an active role in either providing some insurance wraps and also other instruments to help reduce the cost of capital. Thank you.
Thank you very much, Omar, and happy to be here. Good morning to everybody. I'm really pleased and honored to be invited to speak in front of you on this very important issue, actually, which is the cost of capital in Africa, a very critical issue for a continent which is facing massive investment needs, in particular in infrastructure. And so clearly the cost of capital is a key element for Africa to be able to finance its development at a reasonable and sustainable cost. I will try to discuss three elements. The first one is trying to identify what is the current market perception of risk in Africa, and how we can understand this perception. Secondly, I will try to discuss a little bit about to what extent this perception of risk is in line with the fundamentals and the actual credit risk. And Samira mentioned it already a little bit. And the third one is if there is the idea that the cost of capital is high, regardless of whether it's in line with the actual fundamental or not, what can be done actually to reduce this cost of capital, and what type of instruments and investors can be interested in investing in Africa. So the first point regarding the market perception of the risk in Africa, first of all, I think, as also mentioned by Samira, it's important to keep in mind that I would say the fundamentals and the structural issues are key in the way investors can look at opportunities in any regions, in particular in Africa. Therefore, the economic growth, but also more structural factors like the business climate, the governance challenges, the political and security situation, as also mentioned by Gabrielle, are key elements in the way investors will look at opportunities in any country, and in particular in African countries. This is why I think structurally we see that the perception is that the interest risk can be high in Africa, or at least higher than in other regions. We can mention just the number of countries which are rated investment grade. We have only 2 countries on the continent in sub-Saharan Africa which are rated investment grade, when most countries that are also countries that we advise as Lazard are usually rated only single B, and a few countries which have a very strong economic dynamic and positive structural factors can be rated as double B. in particular in Western Africa. I'm thinking about Benin in particular and Ivory Coast. So we see that the structural factors are really important in the way investors perceive the risk of investing in Africa. And by definition, these are elements that are not easy to change, or at least in a short period of time. It requires some sustained effort in terms of policies. So that are the factors under which the authorities may have an influence still on the way the market perceives their risk. We also need to mention the fact that there are some elements that are beyond the control of the authorities in terms of the way the risk is perceived by investors, because as Africa is a net importer of capital flows, by definition it depends also on the global context and so the situation in other economies, in particular in advanced economies, as it was well also mentioned by Gabrielle. We have seen, for instance, that the announcement of significant increases in trade tariffs by the US on Liberation Day has shown an increase in the cost of capital in emerging markets, and in particular also in Africa, where we have seen an increase in the spreads, and therefore a cost of capital which was increasing. So it is important to recall that African countries are mainly dependent on these global financial conditions. And if we look at the recent trend, we see that after the 2008 financial crisis, the low interest rate environment in developed countries has facilitated access to international market for low-income countries. And we have seen many African countries going into the bond market for the first time over this last 15 years. It was, again, due to the fact that there were less good opportunities of investment in advanced economies. And on the contrary, with the COVID crisis, some African countries lost market access during that period of time. And since then, with a higher level of interest rates globally, the access to this financing is also higher. If we just look at the most recent data, so the risk-free rate in dollars is now above 400 basis points for a 10-year maturity, which is much higher than when it was when we were in a low interest rate environment. And on top of that, we need to take into account the sovereign spreads, which are around 500 basis points. Depending, of course, of the country. So it shows that in the current market conditions, having access to market below 10% is not easy for any African countries in that current context, and it does not only depend on their action, but also on the global conditions. The second point I wanted to mention is to what extent this cost of capital and this perception of risk is in line with the fundamentals and with actual credit risk. Indeed, many argue that African countries face higher cost of capital than the actual risk should lead to. Some people mention several reasons for that. They mention the Basel III prudential regulation, which is true, has some higher charges of capital for countries which are not, for instance, OECD members. Others mentioned also some methodologies of a credit rating agency. I mean, there are many reasons for which people may argue that there could be a difference between the perception of risk and the actual risk. The issue comes from mainly from the question of the data, access to data, as also mentioned by Samira, which is in the absence of comprehensive data to assess the actual risk, people need to kind of have an approximation of that risk. And for instance, in the prudential regulation, as I mentioned, the approximation is made by the fact of being, for a member, being an OECD member or not, which is by definition not necessarily fully in line with the actual risk, but it also does give an indication of what the actual risk could be, in the sense that OECD members have common rules, standards that they are committed to apply, and so we can still assume that the risk in such geographies is lower than in other countries. However, we cannot exclude at the same time that this approximation is right, I would say, on average, but not necessarily for each and any situation or each and any country. And therefore, it's important to continue to gather as much as data as possible in order to identify the actual risk in every country. This indeed requires some efforts in terms of data collection, and in this regard, the database developed by MDBs, the GEMS, is very, very useful in that regard and should be much more used by all investors as well to adjust their perception of risk. Last point I wanted to make is what can be done to reduce the cost of capital in Africa. First, I mean, we as Lazar advise our clients on also the elements that I mentioned, which is fundamental, which are the structural elements. And so we advise clients on their macro fiscal strategy because it's key to ensure a sound macroeconomic framework, debt sustainability, which are prerequisites to have access to affordable cost of capital. In particular, we help our clients in their relationship with credit rating agencies. So we help them to define and elaborate their credit history, and also, more importantly, to explain perhaps more appropriately their specificities so that it can be fully taken into account and reflected in the credit rating that will be produced by rating agencies. It's really important because at the end there is always some, to a certain extent, some judgment, and it is key to have it right, to have the right assessment of creditworthiness. We also, of course, advise our clients on some specific transactions. And in that kind of transactions, we see how in their investor base, the appetite can be different from one type of investor to another, depending on the global condition, as I mentioned. In the current context, we see on the market a lot of transactions that have recourse to credit enhancement, usually provided by DFIs, that it could be bilateral institutions or multilateral institutions, like the World Bank and the African Development Bank. Again, it is key in the context where we, as I mentioned earlier, it's really difficult to have, for a plain vanilla instrument, a yield which is below 10% on a 10-year maturity. So this type of credit enhancement are very useful to help the countries to have access to financing at a lower cost, which can be sustained or more sustainable over time. The second type of transaction that we see is also, we see a lot more transactions that are executed through private placement and a bit less on, I would say, public markets. This is mainly due to the fact that private placement reduces then the risk, the execution risk regarding the pricing, and in a context where the pricing is already very, very difficult and challenging, this reduces the risk that the cost of capital is too high. Thirdly, we can also mention some specific, I would say, pockets of liquidity that exist in that current context. Notably, we see some appetite from investors from the Gulf region, where we have much more in the current context liquidity. And there is also the willingness to develop the sukuk market. And in this regard, tapping the sukuk market in the current context where it's much more challenging to have access to bond markets in Western Europe, for instance, can be a good way to lower the cost of capital in that current context. Lastly, I would mention the fact that even if there is I would say, a change of mood politically in the US regarding ESG considerations, there are still some appetite from investors to have opportunities that take into account these considerations. In particular, in Europe, it's clearly the case. And so some instruments, such as debt for nature swaps, blue or green bonds, this type of instrument that try to give to the investors a bit more than just, I would say, a financial investment, but also some ESG considerations, remain some useful instruments to consider for countries to have access to financing at a lower cost than the current market conditions. So to conclude, just to say three things. First, the prerequisite to have a reasonable cost of capital remains structural elements, sound macroeconomic framework, good governance, growth-friendly business climate. This should remain the priorities of countries if they want over time to improve their credit worthiness and to reduce the cost of capital. Second, we can't rule the fact that the cost of capital does not fully reflect the actual risk, and that in some cases the perception of risk is higher than the actual risk. And to address this issue, more transparency is needed to facilitate the assessment of the actual risk. And some initiatives in that regard are very much welcome at the AGM database. And lastly, in such a volatile environment, it is even more critical for countries to remain prudent, to be opportunistic, depending on the market conditions, and to have recourse to innovative type of instruments, which can, in that current challenging times, reduce or maximize the access of capital that they can have. Thank you very much.
Thank you, Shwan. And Annabelle, maybe you can also tell us a little bit about what ATIDI is doing with some of your clients in terms of increasing transparency and that sort of macroeconomic work that you're doing in the background to help reduce the cost of capital. So, Shwan, it was interesting that the spreads actually went up after Liberation Day. It's an interesting statistic, especially that what we've seen from your statistics is that trade with China is growing whilst trade with the US is plateauing, but those tariffs increased the spreads. When China actually announced, I think last week, that they're going tariff-free with all African countries, but obviously that didn't impact any spreads. So interesting market dynamics. And another interesting stat is actually when we look at default rates on infrastructure projects, I think Africa is sort of just after the Middle East, the best performing region at 1.9% default rates, which are very low, which I don't know what that means. Does that mean that actually we're not taking enough risk in terms of infrastructure projects, or there are not enough bankable infrastructure projects, therefore we're only investing in too few? But someone who will be able to tell us a little bit about those market dynamics, what you guys are doing, is Takunda from RMB. You're very involved in a number of different capital raises on the debt capital markets. So tell us your thoughts in terms of market appetite and also innovations that you're seeing, and the role of DFIs ultimately in terms of credit enhancement and guarantees and insurance swaps, etc., that are working in the market.
Thanks, Omar. I think, firstly, thank you to the chairman, Manuel, Benjamin, and the rest of the ATIDI team for the honor of presenting today. Really appreciate it. I think it's actually important to maybe provide a bit of context, because I think telling you what we've done and how we've set ourselves up is almost like getting to the end of the story without people actually understanding the context of what drives banks to do what they do. Specifically talking about RMB, or the First Rand Banking Group. Banks are always, we accused of being too slow, overly cautious, etc. But the reality is we operate in probably the most regulated sector globally, and rightly so. I think, the basic function of a bank is, the transformation of short-term liabilities into long-term assets, or, we borrow short and from depositors, and we lend long into the economy. Now, this obviously creates a systemic risk, which regulators and Basel ask banks to make sure that, one, they've got enough liquidity, two, they've got the right capital adequacy, and three, we have got the risk frameworks internally that allow us to serve our clients, shareholders, etc. So, we're custodians of public trusts, custodians of making sure that our depositors are able to get their money out when there's liquidity. We're custodians to our shareholders to make sure that we're providing sustainable returns and sustainable dividends. We are custodians to our clients to make sure that we're providing the right solutions. custodians to our people to make sure that, we're rewarding them correctly and for innovation, and also, more importantly, to society, to make sure that we are aligned with national interests. In South Africa, a big thing has been power for us. We've been very much involved in renewable energy plants. We reached a landmark figure of $2.5 billion that we've put into renewable projects over the last 2 years, which is quite a big feat for us at FirstRand. But unfortunately, compounding all of this, and I think I've been set up sitting next to Samir here, is that we find that the sovereign ceilings that have been set by global rating agencies are quite punitive upon, corporates, banks, and sometimes, they're not aligned with the fundamentals. So there's almost like a rating glass floor that, if we use some examples around the continent, Dangote, as big as it is, and with the reach that it has, is a B- because it's located in Nigeria. Safaricom, with as much of the impact that it is probably one of the larger banking systems on the continent, acting as a telco company, is a B because it's in Kenya. Same thing can be said by, I'll probably get fired by saying this, but Standard Bank, the largest bank on the continent by assets, is a double B because it's located in South Africa. So this makes it, these perceptions, which my colleague Schwan said, become unaligned with, the risk, the costs that we now have to charge to our clients become elevated. And I think there's quite an interesting stat from the UNDP that since COVID, the cost of debt for Africa has risen between $70 and $80 billion. That is a significant number. And that is completely game-changing. So getting to the question, sorry, that context, I really do believe context is important. But getting to the question, so as FirstRand, how do we set ourselves up? Operationally, it means that we need to invest in entities where we can attract capital. So we've got offices in the US. Not only are we trying to attract capital there, but we're also trying to get closer to the global investors, where we can market and distribute. We've got offices in London. What are we trying to do there? Trying to get closer to also a large investment pool and also the Lloyd's of London. Relationships, obviously, important to us from an insurance perspective. We've got to set up entities in Mauritius where we can book and get tax relief and make sure that we can cheapen it internally. What do? We've got teams that are focused on private equity so that we can try and invest in the real economy. We've also got venture capital set up to help with small upcoming businesses. We have set up blended finance teams that are now focused on partnering with institutions such as ATIDI, AFDB, and Afrixim to bring right price capital to our clients. We are setting up private credit funds in our offices in Mumbai to deploy capital from there. And structurally, I think if we can use some examples, 4 or 5 years ago, our team was the first to come to market with short-term working capital solution for Ministry of Finances, where we got MEGA to wrap a trade loan to provide financing to the government of Ivory Coast. It's now quite a common product that we're seeing. When it comes to the creation of balance sheet relief, we also create SPVs where we are reliant on insurance and DFI reps to be able to deploy cheaper capital. So I think, I'd like to probably just, touch on a point that was raised yesterday by the CEO with regards to, the importance of the ratings of, institutions such as ATIDI, AFRIXIM, TDB, and AFDB, who play that very important role in helping us to relieve capital on our balance sheets, to create the structures where we can attract international capital. And I think for the comfort of those internationals that are investing, because of these covers that we've got, that, PCS and things like that do exist. So, if we look at what we've been doing in the capital markets from a local perspective, in 2022, we were the first to market to bring a gender bond for Barloworld, one of our biggest industrial companies. And after that, we followed with another bond, which is Women in Business, which was focused on SMEs, another bond. And I think from an ESG perspective, over the last 5 years, we've managed to deploy close to $5.5 billion now in just trying to support development. And quite a lot of that that we've been doing on the lending side, I think we've been heavily reliant upon, the various structures that I've mentioned. I'll leave it there and happy to take questions. Thank you.
Thank you, Takunda. So, you spoke about gender bonds, and I know that ATIDI is always very keen to make sure that we're well represented here and diverse in terms of nationalities and also gender and region. So it's fantastic. That's why they insisted that we have some talented speakers among us. None less than Annabelle, who's a senior underwriter at ATIDI, who's going to tell us a little bit about what ATIDI has done and possibly responding to what's been said in terms of improving that transparency and stronger data management. Thank you.
Thank you, Omar. It's a pleasure to be here. Well, it's actually clear that Africa need access to capital in order to fund the USD 170 billion required annually to close the infrastructure gap, and the 90 billion that is required annually to fund the energy gap. But I mean, the question is, where's the money going to come from when we know that, the amount of concessional funding that is available out there is limited? It's actually also, reducing under Trump's administration. We've seen, the Americans shutting down development programs. We've seen them as well, cutting 555 million to the African Development Fund, the concessional arm of the AFDB. At the same time, and I appreciated, Samira, your intervention, but out of the 26 rated sovereign from S&P, only 2 are investment grade, right? Botswana and Mauritius. So it's clear that this will bring interest rates at debt levels that are oftentimes untenable. And at ATIDI, as a DFI, we are addressing this issue with our guarantees products. Manuel had mentioned earlier the Beta Water project, which we have visited with the board of directors a couple of days ago. Beta, and I'll give you this concrete example. Back in 2021, the government of Angola was looking to raise $1.1 billion to finance a water infrastructure project in the town of Beta to restructure their water infrastructure equipments. It consists of production, storage, distribution, transmission, and also the construction of a water treatment plant. So the amounts for this project, this priority project, was quite huge at 1.1 billion. And if you recall, 2021, we're in the midst of the oil crisis, in the midst of the pandemic as well, and the yields on the Angolan sovereign bonds were north of 12%. So ATIDI, together with the World Bank, the IBRD, the International Bank for Reconstruction and Development, managed to de-risk the entire commercial facility for these landmark projects. The commercial lenders, 5 in total on the project, provided 910 million in financing, and the facility was entirely de-risked by RBRD, who provided $500 million first loss guarantee, and ATIDI, together with our partners, the reinsurers, the Lloyd's market, that are present here. We managed to, backstop the Angolan's government obligation vis-à-vis of the lenders. So all in all, the government was able to raise financing of $910 million at well below 7%, so that's 6.5% to be precise. So semi-concessional rates, which is actually quite, notable given the context that we were in at that time. So this is how ATIDI helps, and supports its member country to bring down the cost of capital, to bring down, the cost of capital that is needed to achieve development projects. And at the same time, some countries have also used our guarantee products in a very, I'd say, efficient ways. Countries like Benin or even Togo, who've reprofiled entirely their domestic debts with cheaper financing. So, for instance, Togo leveraged on ATIDI's, A-rated paper. So bank MUFG at the time, leveraged on ATIDI's A-rated guarantee to structure a financing for Togo and attract European and Asian investors to provide $104 million US dollars with a 12-year tenor at 4.6% interest rate. So it's important, to see how, this structure managed to bring in European and Asian investors who would have never invested in African debt had it not been for, an institution like ATIDI, who's able to provide a credit enhancement with its A-rated rating. At the same time, the second tranche was provided to Togo at that time by Société Générale. We raised $150 million on 10-year deal at 4.5%. So Togo raised in total $250 million on 10 years to prepay domestic debts, bearing interest of around 7.6%. So you can see really the delta in terms of savings. This had a huge impact, and other countries like Benin, I know Shwan and Samira, you are interested in Benin, but Benin actually replicated that same type of structure under Minister Wadani's leadership. So these are the types of innovation that we do at ATIDI. We've seen as well other innovation, in development finance from, institutions, sister companies like the World Bank, who are able to, provide debt for development swaps, debt for nature swaps, where a country exchanges basically its expensive debts for cheaper debts, and often supported by a credit enhancement like a guarantee. And then the savings are redirected into development spending. So fiscal space is actually, created as expenditures shift from servicing debt to specific development goals. So these types of structure were done, I know, in certain countries like Ecuador, but also on the continent, in Gabon, in Côte d'Ivoire, in the Seychelles. So this is the types of innovation that we see in the development finance, where ATIDI is actually playing a very instrumental role, and we'll keep continuing playing this role for as long as financial architecture is misaligned with the requirements that African countries have in terms of raising capital at affordable and sustainable terms. So to answer your question, Omar, in terms of the transparency, what we've done as well in this space, because Shwan had mentioned that it's important as well for sovereigns, African sovereigns, to be transparent in order to change the perception of risk. At ATIDI, we've played as well an important role in that space. we often say that, at times it's not so much the real risk, but investors are wary, have a perception of risk that is, higher on the continent. So we encourage our sovereigns, we encourage our member countries to be transparent. And we've developed actually in the energy space what we call the transparency tools, where we've asked, the utility companies on the continent to be transparent about, their payment, their repayment, the repayment of their obligations, providing information, something akin to Dun & Bradstreet, like a sort of a payment index that showcase, that demonstrate to IPPs that utility companies do eventually pay, albeit sometimes with a delay, but eventually they will pay, right? And to my knowledge, no African countries have ever defaulted on an energy project. So this is the work that we do with, with utility companies, so as the SOEs, and that can be actually, say, extended to other sectors as well. So I'll pause there and take any questions if anyone has any. Thank you.
Thank you, Annabelle. So we've actually run out of time, but maybe we can have, let's say, 3 comments from the floor, if you wish, and then we'll go into the next panel, and then we can take more comments across the 2 panels. So if you can just press the button, let us know who you are, and any comment. If it's a question, please let us know who is it addressed to.
Oui, merci. Mon nom, c'est Moyen Baniab. Je représente le gouvernement du Togo. J'ai une question sur la perception du risque. Bon, j'ai bien noté que les biais peuvent provenir des déficits de transparence dans la communication qui est faite. Ça, c'est un message que nous entendons. Mais l'Afrique perd chaque année environ 74,5 milliards de dollars. Il a été dit que le déficit en matière d'infrastructure est de l'ordre, je crois, de 100, c'est ça? 170. Bon, donc déjà, si on rattrapait via les biais liés à la perception, je pense qu'on ferait une partie du chemin. 74,5 milliards, ce sont les chiffres du PNUD. Donc l'Afrique perd chaque année 74,5 milliards de dollars par an en raison d'une mauvaise notation et d'une perception de risque qui ne reflète pas la réalité. Pour autant, l'agence Moody's Analytics indique que les taux de défaillance sur les financements d'infrastructures montrent que l'Afrique est mieux classée que l'Asie et l'Amérique latine. Donc le taux de défaillance en Afrique, et ça c'est un rapport de 2020, c'est relativement ancien, peut-être que les choses ont évolué, se sont dégradées, mais en tout cas en 2020, le taux de défaillance était estimé en Afrique à 5,5 versus 8,5 pour l'Asie et 13% pour l'Amérique latine. Malgré ce meilleur classement, l'Afrique pâtit plus d'une mauvaise perception que les pays d'Asie et que les pays d'Amérique latine. Alors j'ai envie d'avoir votre perspective sur tous ces constats. Merci.
Simmer, you'd like to take that?
Yes, I'm happy to start because I'm sure many will contribute. Thank you very much for your question. I'll respond in English. I think it will be just easier for me, even though I'm French. It's an important issue that you have raised, very serious, because if we want to consider the long-term development on the continent, yes, the cost of financing has to come down. It's equally important to certainly highlight the fact that credit ratings are one component in the decision-makings of capital allocators. capital allocators, so global investors, decide on ultimately what is their trade-off when it comes to the returns they want to get on a loan or a bond they buy. So it's like an ecosystem, if you will. As long as, I suppose, African sovereigns will raise funding on the global market in foreign currency, so in US dollars, there's a number of factors to take into consideration, and global credit conditions, so the price of US dollar liquidity is important. Just as an example, in 2021, Kenya raised $2 billion at 6.3% or 6.4%. So that was a Eurobond. That was 2021. Pricing of US dollar liquidity was such that actually rates were still low. So that was just before essentially what happened, the external event that happened in February 2022. When Kenya tried to refinance the maiden name 2014 Eurobond, 2 billion as well, so that was due in June 2024, they raised 1.5 billion at 11.6%, I think, or close to. Please don't hold me to it, but let's call it a 12%. In last year, essentially, a year ago or so, the price of global liquidity, so US dollar liquidity, was way more expensive because of where the US Fed's rates were. So it's that, so that's one thing, and I think we all have mentioned this, and also the perception. So the perception of risk for global investors, not for rating agencies. We don't trade and we don't rate on perception of risk. We have very defined and clear methodology where we compare African risks with LATAM risk, with Asian risk, with European risk. So an investment grade rating, as far as we are concerned for Botswana, for instance, it's not a lower BBB plus rating comparatively to another BBB plus country. It is exactly the same when it comes to the definition of what we rate to, which is the ability and willingness to pay financial obligations in time and in full. So there is no haircut in that. But that perception of risk that I want to go back to was for investors the notion that essentially that proactive debt liability or liability management was not proactive enough for them, and essentially they decided, given where the US dollar liquidity pricing is and their sense that refinancing was not handled early enough, ended up with that 12%, and I hope it's 12%, but I think it's close to anyway. It was close to that. So it's not just the credit ratings. I really want to emphasize that. Yes, it is one component. It's an important component. So global credit ratings are important to attract global liquidity because that's where the capital is. And I know that Annabelle said earlier, you know, where are we going to find these trillions of dollars that we need to develop our infrastructure pipelines? For now, the liquidity is certainly, the trillions are in the US and Europe. There is idle capital sitting there. And yes, you know, the global allocators will find a way to price it the way they deem fit. We equally know that the global financial crisis back in 2008 has taught us that essentially no one operates in a vacuum, but also regulation has imposed on all these global investors to essentially also run their own credit research. So yes, they use credit ratings, but they also have their own credit research. It's important for them to essentially sort of mix the two and decide on where they want to go from there. So I think it's important to be balanced when it comes to that. are global credit rating agency answering the full equation when it comes to credit risk? Perhaps national ratings could be more appropriate for domestic liquidity. But we have seen that like volatile or let's say volatile macroeconomic indicators in many countries in Africa led to essentially high inflation, and so central banks have raised the cost of borrowing as well domestically. It's not just, global investors and global liquidity pricing. Even even domestic pricing have been very high because macroeconomic instability were underpinning the rationale for central banks. African central banks raised interest rates. So I think we have to be balanced in the way we look at things. It is true what you are saying, but there are reasons for them, and I think it's fair to essentially talk about all of it, not just part of it.
Thank you, Samira. Takunda had to get a flight, so he's rushed out, but he mentioned something that probably doesn't get enough attention, which is Basel III and the constraints that it places on a lot of African financials. So Basel III is something that, the credit ratings debate is live and very much alive, and with lots of opinions out there, but the Basel III debate is probably not considered enough, and maybe a lot more advocacy and lobbying needs to be done around that to also see how we can create sort of, I don't want to say looser regulation, but different regulations that does not penalize African capital, which Takunda mentioned earlier. So we're actually running a little bit late, but we'll take one more, and then we'll have to go to a quick coffee break before coming back for the roundtable.
Mr. Moderator, thank you for the opportunity. I just wanted to make a clarification. My name is Albert Mwenda. I come from Kenya, and because there might be some investors here, I wanted to just clarify that Kenya has not to date issued a bond at rates above 2 digits. They are all below 2 digits. The 2024 bond that was issued to refinance some expensive debt was issued at 9.7%. And even the one that was issued sometime this year was also at below 2 digits. Just wanted to be on record. Thank you, Chair.
Okay, so this gentleman here is lucky, so because that wasn't a statement, a clarification, so go ahead. If you can be very quick, please. Thank you.
Okay. Moi, c'est Wango Philippe Benwende du Burkina Faso. Alors, je voudrais à l'entame vous remercier pour la clarté des différentes présentations, saluer véritablement les efforts effectués par l'ATIDI dans les différents États. Alors, je voudrais profiter et poser une question à la suite essentiellement de la première présentation de Madame qui m'a un peu touché. Merci beaucoup, Madame. Alors, cette question est relative aux efforts. Quels sont les efforts qui sont effectués par les différentes banques, les investisseurs, alors pour pour un peu soutenir les efforts des États du Sahel? Je veux parler plus particulièrement de nos 3 États qui actuellement sont sous l'emprise, en tout cas des risques liés au terrorisme. Quels sont les efforts effectués par les investisseurs à ce niveau? Parce qu'on constate que ces temps-ci, alors ces investisseurs, comme l'exposant le disait tantôt, observent une certaine restriction de financement à leur égard. Je vous remercie.
Thank you very much for the question. I think what we're seeing is that in the region, specifically the three states that I mentioned, Niger, Mali, and Burkina Faso, we're seeing a repositioning. We're seeing a repositioning of diplomatic relations regionally, and that is, probably most clearly indicated by the exit from ECOWAS. We're seeing a repositioning globally in terms of diplomatic relations, shifting perhaps from French relations to further east, including Russia and China. I would say that we're still in the midst of this repositioning. And because of that, efforts to address insecurity, as well as then the sort of secondary conversations when it comes to financing, are almost in a pause. This repositioning has to settle, the dust has to settle first before the picture is a little bit clearer. At that point, how governments, whether it's with partners or not, are able to address the security concerns will become clearer. And I think with that will bring what all investors are often looking for: greater predictability, greater certainty, though it will never be 100%. And with that, I think bankers will come into the conversation. So unfortunately, we're still in a position of shifting sands. And until that settles, I think there'll be a delay before we see the progress. I hope that answers your question.
Thank you very much to all the discussants today. Thank you all for being here. I think well, the message that I take home is that we're all on the same side, and that we need to work together ultimately, because it makes sense for all of us that African paper and African capital becomes interesting, or interesting. It is interesting, but it becomes attractive to the wider world. I think the role of the DFIs has been highlighted by Annabelle and by all of us today, and I think the next session will probably emphasize that. And I think the messaging that I've heard from the past couple of days is that we need to be supportive of the DFIs, because they're going to be playing a very critical role over the next few years, or especially with all the turbulence that we're seeing and the changes that we're seeing in terms of ODA and international interest on the continent. And maybe in the next panel, in the next roundtable, we'll also hear about opportunities elsewhere. So what some of these DFIs are doing to attract capital, as I said, from China and Japan. And I think the team from AFC and Bank of Industry may give us some clear examples there. So a round of applause. We've got a very quick comfort break, and then we'll come back in 5 minutes. So there's some coffee outside, but if we can be back in the next 5 to 10 minutes maximum. Thank you, please. And if our next speakers can come and sit around here, we'll seat them and the next moderator.
que vous avez apprécié la pause café, qu'elle aura été rafraîchissante. So, building on what we've heard in the first roundtable, let's build on that. Let's move swiftly to the second roundtable, reducing the cost of capital through innovation. And we'll be together exploring concrete, actionable strategies from blended finance to capital markets reform, from guarantees to liquidity mechanisms, to not only unlock capital, but ensure that it works harder and smarter. And I really want to stress these points. So we were hoping to start with an insight from Dr. Vera Songwe. She was going to join us online. We're having a couple of technical issues, but we do hope that she'll be able to join at some point. So now, let me introduce our discussants. So we'll start with welcoming Mr. Delvin Pipa, Director of Studies and Market Development at Capital Market Commission here in Angola. We also have in the center table Mr. John Martin Dawula, Vice President for Financial Institutions and Trade Finance at the African Finance Corporation in Nigeria. We are also in the company of Mr. Leonard Kange, Special Advisor to the Managing Director and CEO of Bank of Industry in Nigeria also. We also have a lady, as you can see, Mrs. Claudia Lopes. She's Head of Trade, Syndications and Distribution for Financial Markets and Banking at Crown Agents Bank. And last but certainly not least, we have Dr. Patrick Olomo, Acting Director for Economic Development, Integration and Trade, Head of Economic Policy and Sustainable Development at the African Union Commission. And I would actually like to start with you, Dr. Olomo, because you will have to leave us in a few minutes to join a meeting. So I would like to start by asking you, we have been hearing how different institutions and innovation are taking place at ground level. However, while there is consensus at a continental level, we do see that fragmentations persist at a national level. So can you please tell us how can the African Union better support financial institutions and sovereigns to ensure regulatory consistency and policy alignment? And also, what role can the AU play in championing risk mitigation and strengthening capital access across the continent?
Thank you. Thank you very much, Madam Chair. And as this is my first time to take the floor, I would like, on behalf of the African Union, to sincerely appreciate the organizers and the host of the meeting, ATIDI, for the excellent organization of the meeting since we arrived here in Luanda. Allow me also, on behalf of the AU, to sincerely appreciate Angola for hosting this event and for providing all the facilities that we are enjoying since we arrived here in Luanda. It is the Africa we all want. That's the Africa we are all looking for. With regards to the question that you asked, Madam Chair, I would like to first of all set the scene for our conversation today. And one of the most pressing challenges that our economies are facing today is relating to the high cost of capital. And this, we can see it in many forms. The first one is the fact that our capacities to access concessional financing today, as was highlighted in the first session, is certainly to be questioned, because despite the fact that there are actions that are undertaken at the continental level and at the global level to reduce the cost of capital for African countries, we can actually see that the cost of capital is still getting higher and higher. And this is absolutely difficult for our countries to mobilize resources in a sustainable manner and finance development effectively, as we are all looking for. The second point that I would like to draw your attention on is about the high debt cost. That is also depriving our continent of absolutely important resources. And if you can look at the data, you will see that our countries are, financing debt at an extremely high cost, which is estimated today by the African Development Bank at more than 500% what is required for the multilateral development system that is in place. It means that we are paying 500% above what is required and acceptable. It shows that there is certainly, an important, decision to make, or that there are reforms that need to be conducted at the global level to make sure that African countries have, access to capital at an affordable and, cost that is allowing them to invest in development. The third point is about the credit rating system that is also affecting the way our countries are accessing capital. And for that, I think in the first session, we had a figure of approximately 74 billion US dollars that we are losing per year because of, poor risk perception. But in addition to all those resources that we are losing, it is also important to draw your attention on what we are losing in terms of illicit financial flows, estimated at approximately 90 billion US dollars, corruption at approximately 148 billion US dollars, and international profit shifting is costing also 275 billion US dollars per year. The aggregate figure that we have is that the continent is losing 587 billion US dollars per year, which, if we take it on a daily basis, means that we are losing not less than 570 million per day. So, when we see this context, we can now understand the role of the African Union as permanent member of the G20, but also as, continental institution that has the mandate of representing the continent in global discussions. First of all, when we look at our interventions at the G20, the first point that we raised with the support of the South African presidency was with regards to the fact that we wanted to, bring the attention or draw the attention of G20 members on the cost of capital, which is extremely high. And that conversation, I think, will allow us this year, with the support of institutions such as ATIDI, the African Development Bank, Afrexim Bank, to provide continental tailor-made responses to those to that very important issue. Secondly, our call has always been to support our multilateral development banks. And in 2023, precisely in February, we have set up at the African Union level what we call the Alliance of African Multilateral Financial Institutions, which demonstrates that, once again, the African Union is playing the vital role that it should play to protect our continental financial institutions against all odds. I don't want to allude to the international context that you all are familiar with. You know the geopolitical tensions, you know the geo-economical tensions, you know the trade wars and all the issues that we are grappling with. But fundamentally, our call has been that our financial institutions, including ATIDI, should enjoy the high-level protection that should come from our member states. And in that perspective, if you look at the set of decisions that have recently been adopted by ministers of finance in 2023, you will see that there is a constant call for the respect of the preferred creditor status of African multilateral financial institutions. This is enshrined in their treaties that all our member states have signed and ratified. So there is no need for us to question, the protection that should be provided to our financial institutions against all the dangers and all the odds that we are facing. That is number one, Madam Chair. Secondly, the global context, as I said, is having a huge impact on the way African multilateral financial institutions are being considered, even in global discussions. None of our institutions to date is part of the global deal of the common framework for debt treatment. This, in our perspective, and that is the call that we have formulated at the G20, is certainly an important strategic mistake, because our financial institutions are the only institutions that understand the seriousness and the magnitude of the challenge that our countries are facing. And they are the ones providing the last resort support to our member states when they are facing challenges. So their protection is, for us at the African Union, the number one priority that we are pushing to, to agree on at continental, but also at international levels. Unfortunately, maybe, as your question was referring to, there might be some, I don't want to say situations, but there might be some, context where we can have the impression that, some of the countries or that countries are not fully supporting this continental drive to support our financial institutions. It is just an illusion, and I want to be clear on that. There is no situation where any of our member states has ever said publicly that they are not supporting our financial institutions. Not to conclude and say that, let's not just, take the things in the side of perceptions. We need to have facts, we need to know the reality, and we need to know that there is no other commitments than the one that is aimed at supporting our multilateral financial institutions. We are going to hold series of consultations, prior to the Continental Ministerial Meeting of Finance, Monetary Affairs, Economic Planning and Integration. That is scheduled to be held from 29 September to 3 of August 2025, where we will insist once again on the need to protect our financial institutions. They are our institutions. They know how to support the continent. They have been doing that with pride, with, the resources that they have at an extremely affordable cost. And we do really absolutely believe that they need to be protected and they need to be secured against all the dangers. Thank you very much.
Thank you very much, Dr. Lomo, for such a compelling reminder, first of all, of the key role that the African Union plays, and also for all these incredible numbers that you just shared. I know we know that, the gaps are huge, but we are also, we need to bear in mind that these are trickling down to every single citizen on their less infrastructures, less school, less hospital, less food on the table. So indeed, these discussions are very, very important. Thank you very much, Dr. Lomo. I'm very aware that you might have to leave us at any moment. But let's now turn to you, Mr. Pipa, and zoom in on your country, our host, Angola. What key developments are you seeing in Angola to boost market liquidity, particularly around privatizations and domestic capital mobilization? And how can these efforts help build stronger long-term investor confidence?
Thanks. I will be addressing in Portuguese. Bom dia aos estimados membros do Corpo Diretivo, ATIDI, e estimados convidados. Em Angola, nós temos um mercado de capitais atualmente ainda dominado pelos títulos de dívida pública. É importante nós darmos esta nota de que o mercado tem vindo a desenvolver e a surgir com novos instrumentos. De 2022 para cá, tivemos ativo o mercado de ações, a nossa Bolsa de Valores, e de lá para cá temos 4 empresas que emitiram ações em Bolsa. E temos também o registro de 3 obrigações corporativas que até então financiaram-se no mercado de capitais, e dessas 3 temos 2 atualmente ativas. É um mercado bastante jovem, mas que temos sentido um crescimento exponencial e cada vez mais potencial para crescer e ganhar robustez. Nós entendemos que o esforço para tornar o mercado mais atrativo e reduzir naturalmente o custo do capital passa por fortalecer o sistema financeiro como um todo, e para tal envolve termos outros setores para além da banca a ganhar cada vez mais este espaço e robustez para também financiar a economia e o setor real da economia. Com esse entendimento é que estas 4 emissões de ações ocorreram até então, muito inspirado por um programa de privatizações que o governo lançou, que está em curso, em que, através desse programa, muitos dos ativos que estão na esfera do Estado são então transferidos para a esfera privada através de concursos públicos e através de leilões, e também alguns desses estão definidos para serem privatizados via oferta pública inicial na Bolsa. Esta estratégia do governo ativou um mercado de capitais no segmento característico, que é o segmento do mercado de ações, e tem servido para inspirar os outros entes e as outras entidades a utilizarem o mercado de capitais como uma alternativa. Existem outras entidades que ainda expectativamos emitirem ações ao longo do ano. Estamos a falar de cerca de 3 empresas, e nós temos notado que, para além do próprio Estado, que pretende desfazer-se e vender algumas das suas participações via privatização, tem se juntado à iniciativa outros acionistas também das empresas das quais o Estado detém as ações e tem financiado o mercado. Acreditamos que iniciativas como essas são bem-vindas e ajudam a arrancar o mercado e trazer cada vez mais independência e robustez no sistema financeiro, que atualmente, para termos uma ideia, nós temos uma bolsa de valores que negocia, no último ano negociou registrou um volume de negociação de aproximadamente 6 bilhões de kwanza, e deste montante de negociação, a maior parte ainda predomina-se as negociações de títulos de dívida pública, mas com o surgimento cada vez mais de outros instrumentos, poderemos então ter aqui alternativas que vêm trazer maior concorrência e ajudar também a reduzir o custo de capital. Temos feito e temos procurado, não é, quebrar aqui alguma cultura que existe de receio de abrir o capital. Existe internamente algum receio de perder o controle. Nós temos essa percepção e razão pela qual algumas empresas recuam quando ponderam, não é, o financiamento via mercado de capitais. Para tal, nós temos feito algumas iniciativas em concordância com os agentes do mercado, onde nós vamos ter com alguns potenciais emitentes e, inclusive, também investidores institucionais, no sentido de transmitir o potencial e as oportunidades que existem no investimento, usando como fonte de financiamento alternativas aquelas que estão disponíveis no mercado de capitais. Temos feito esse esforço de aproximar-se dessas entidades e desmistificar e transmitir, não é, que esta primícia do mercado financeiro em que nós colocamos, não é, diversos ativos na nossa carteira é, na verdade, benéfica e é bem-vinda e vem para trazer maior resiliência para a entidade. Nós temos algumas entidades, alguns investidores institucionais que atualmente demonstram algum receio em diversificar as suas carteiras. Nós vemos alguns investidores institucionais investindo mais de 85% em títulos de dívida pública e depósitos a prazo, quando em outras localidades, aqui bem perto, já vemos investidores institucionais a participarem mais ativamente no mercado de ações, no mercado de fundos de capital de risco, private equity. Estamos cientes do longo caminho que nós temos e que a participação de instituições multilaterais e a colaboração com outras instituições poderá ser chave para trazermos para nós cada vez mais essa independência e acreditarmos na força interna para dar e suportar o mercado e apoiar as emissões nacionais. Obrigado.
Muito obrigada. Muito obrigada, Dr. Pipa, para esta apresentação. Independência, robustez, palavras-chave, não são? Muito obrigada. And it's very true that we'll have to proceed to a quebra da cultura, como o doutor falou, é muito importante, muito necessário. Mais uma vez, obrigada. So building on that, let's now turn to you, Mr. John Martin Daula. Your institution, AFC, plays a key role in supporting sovereigns, sub-sovereigns, and corporates alike. How is AFC leveraging its credit ratings and innovations to help reduce the perception of African risk? Could you also touch, please, on any recent innovations in this place?
Thank you very much. It's a pleasure to be here. I thank ATIDI, which is a sister African multilateral to Africa Finance Corporation, for inviting me and for inviting AFC. So you've probably heard about AFC. AFC is a multilateral that was set up to promote economic development in Africa by investing in projects, especially, that are geared towards solving key problems that are hindrances to economic development in Africa. So just to touch on that side, for instance, the connectedness of Africa. It has been said that Africa is a market of 1 billion plus people, but that market is highly fragmented. So in relation to the connectedness, AFC invests in physical and also digital infrastructure assets in order to ensure that there is actually linkages to make that market a reality. AFC also invests in energy resources across the continent to ensure raw materials. So one of the things that AFC does is to try and promote the building of industry in Africa, with the objective of that being beneficiation to add value to raw materials and therefore to promote the value that countries extract from their raw material resources. So away from those challenges, because that is really now the infrastructure side of AFC, but AFC is also interested in access to finance, which is the topic for today, reducing the cost of capital through innovation. So I guess one of the things that AFC does from that angle is that, since our inception in 2007, we have built a track record of structuring transactions in various sectors, some of which I have mentioned. We've structured transactions in the project finance space, in the sovereign space for FIs, banks, but also in the corporate finance space. So we've built a strong track record, we've built experience to ensure that the opportunities that exist within the continent, which are most times at a very raw stage, right? We'll all agree that opportunities are not in shortage on the African continent. But the question is, how bankable are those opportunities? So AFC has built the experience to bring those raw opportunities to bankability through our structuring knowledge. And then after that, we pride ourselves in playing a catalytic role to ensure that capital, especially global capital, flows into these projects across the African continent, and it flows affordably. So that's one of the things that AFC does. And then the second thing is obviously funding. We ourselves participate in these transactions across the sectors that I mentioned. We are funded in hard currency. We know that Africa is still a net importer from the rest of the world. We need hard currency for critical imports, for instance, like refined petroleum, like we saw during COVID, for medicines, etc. So AFC, alongside our global partners, we bring in capital to meet the financing requirements of African players. I've been asked a question on de-risking, which is essentially AFC's role to ensure that capital is affordable. In the first session of the roundtable, one of the speakers mentioned that, for instance, banks are capped at the ratings of their sovereigns. So you find large banks, for instance, in South Africa being capped at the rating of the South African sovereign, large banks in Egypt being capped at the rating of the Egyptian sovereign, and we see that in Nigeria and other countries. By virtue of the way that multilaterals like AFC are instituted or incorporated, we have ratings that are able to supersede the ratings of countries in Africa. For instance, AFC is rated A3, just like ATIDI, and that A3 is essentially investment grade rating. So we use that rating to wrap transactions in the sectors which I mentioned earlier. We wrap transactions, for instance, in trade. We offer our guarantees to ensure that banks across the continent have confirmation lines that they can use to satisfy their import trade requirements. We use our A rating to wrap sovereign debt issuances. A good example that comes to mind is the Samurai bond that was issued by the Arab Republic of Egypt about a year and a half ago. with the help of a Japanese bank. So the European subsidiary of the Japanese bank obviously was subject to European regulatory requirements, which is also another hindrance for banks, by the way. So the European subsidiary came to AFC and asked us to re-guarantee them so that they could wrap the debt issuance by the Republic of Egypt. When Egypt issued this samurai bond, the bond was actually oversubscribed in the Japanese market where the bond was sold. So AFC's participation in that transaction played a key role in ensuring that the country affordably accessed financing. At the time, you'll recall, late 2023, risk fundamentals were still very much high across emerging markets, and it was very expensive for countries to tap into financing. But that bond was actually very successful. AFC also wraps banks that are looking to raise capital from third parties. I'm joined on this panel by our friend, Mr. Leonard Kangi from Bank of Industry. AFC contributed successfully to Bank of Industry raising up to €2 billion last year from the international capital markets, again by throwing our weight behind the Bank of Industry. At that time, Nigeria was rated CAA1. AFC threw our A rating behind the Bank of Industry, enabling them to diversify their lender pool and also to optimize their cost of funding in that transaction. From an access to finance angle, we're also very much interested in the development of local capital markets. So I've spoken about the foreign currency side of things, but local currency, the different African countries, for instance, have capital markets that are denominated in various local currencies. So in this regard, what AFC has done is that we've partnered with key partners. For instance, in Nigeria, we partnered with the Nigeria Sovereign Investment Authority to set up an institution called InfraCredit. InfraCredit basically offers local currency debt wraps to local currency debt issuances. What that does is that it enables local investors, especially pension funds, because we all appreciate that pension funds have liabilities that are long-term that can be deployed to projects that require long-term capital. So we've done that in Nigeria. We're looking to replicate that in Kenya with a company called Damana, and also across various other countries in Africa, basically helping to deepen the participation of local capital markets with regards to raising of capital for local development. Coming back to AFC, we're also looking to diversify our own funding. We have recently procured a rating from China, from S&P China, which is a AAA rating in China. And what that means is that AFC is now ready to raise funding from the Chinese market. I'm sure any time from now you'll be hearing of us raising new capital within those markets like Asia, which capital we hope to come back and deploy affordably on the African continent. We are also constantly trying to increase or to widen our shareholder base. A year or so ago, we invited our first non-regional member, being the Republic of Turkey, investing capital in AFC's capital, also looking to continue to promote our activities across the African continent. I think the previous speaker, Dr. Lomo, mentioned what we are doing as African multilaterals from a perspective of advocacy. I'm not going to repeat his comments on the conversation that are going on around preferred creditor status, but that's also one of the areas that AFC is very much involved in. Our president, Mr. Samaila Zubairu, is currently the president of the Alliance of African Multilateral Financial Institutions. And we're trying to speak with a single voice, just trying to highlight the role, the counter-cyclical role that African multilaterals have played across the continent, especially in the last 4 years, when we acted as lenders of last resort, when we continue to provide financing into sectors that others seem to have shied away from, for instance, like oil and gas, which are the mainstays of economies of different African countries. For instance, like Nigeria, if you say Nigeria cannot exploit its oil and gas resources, then you're definitely hindering the economic progress of that country. So I'll stop here, and I'll be happy to take questions.
Thank you very much, and we are looking forward to your questions indeed. So thank you very much, Mr. Daoula, for this insightful overview of the crucial actions taken by AFC. And that brings me to you, Mr. Kange. We've heard the impactful role of AFC, and let's talk about collaboration. How is the Bank of Industry working with institutions like AFC to mobilize and deploy capital, particularly into local industries? And what blended finance tools are proving most useful in Nigeria's context to stimulate industrial growth and job creation?
Thank you very much, Anne-Marie. And thanks to the ATIDI team led by Mr. Moses for giving us this opportunity and the great work you're doing supporting African development that makes it possible for us to survive despite all the headwinds that we're facing macroeconomically. The Bank of Industry is a national DFI. We're owned by the federal government of Nigeria. So we're publicly owned, 65 years old, but our focus is strictly on the private sector. And what we do is to focus on supporting industry, basically to help industry to add value. One of the challenges that most African nations are facing is the issue of, shipping out raw materials, unprocessed, no value addition, it's taken out of the continent, then refined and processed into finished goods, and sold back to the continent at multiples of what we received. It is not a surprise that most African countries are having significant challenges, deficits, budget challenges, revenue challenges, and the economy is not growing, unemployment is very high, not much is happening in terms of growth. This has to change, and that is the mission that Bank of Industry has been entrusted with in Nigeria, to support our MSMEs, to produce, to grow, to add value, and stop this vicious cycle of commodity, sending out commodities, etc., and all of that. Every time you hear the markets have changed, the prices have changed of commodities, what happens? The revenue expected for most governments goes down. And that's why we're facing all these challenges. So to address that, it's one of our key missions. Now, Mr. Olomo and a number of people, I think Annabelle also mentioned about the huge gap, funding gap, that Africa is facing. Now, the figure ranges from 100 billion annually to more, depending on who you speak to. How do you address this? Because for industry to grow, for us to create wealth and produce, we need to produce at a competitive rate, which means that the cost of financing must come down. It is not sustainable where it is now. We must bring that cost of financing down. And how do we do that? You've seen the rating actions that happens since COVID. Only 2 African countries have investment grade rating. So if a DFI like BOI approaches the market, we'll be talking about raising money benchmarked against the sovereign. Nigeria debt is about 12%, sometimes more, depending, right? So if we are a national DFI, we're talking about that percentage plus a premium because we're a DFI. You deploy that kind of money to support an MSME trying to produce at what tenor? Maybe 2 years, 3 years, because it's very also limited in that aspect. And you're talking about a project, a manufacturing project, which requires patient capital, long-term funding at affordable rates. That project is dead on arrival. So we have this vicious cycle, right? We need money, we can't get it at affordable rates, our industries are suffering, we have unemployment, economies are going down, etc., and that makes it even more difficult for the countries to be rated investment grade because, so how do we get out of it? What that means is that we need to innovate. We have to find creative ways of raising money at affordable rates and in the volume and amounts that are required for us to make a difference. And that is what the Bank of Industry has done. With the help of our very good friends like the AFC, they've provided support to us. I will just use one example of the most recent transaction that we concluded last year. Bank of Industry, with the support of the AFC, was able to raise 2 billion euro from the international market at a pricing of Euribor plus 1.2%. How is that possible? Nigeria is rated CAAA, CAA1. That's not investment grade. So what happened here is that with the rating, the AR rating of AFC and the guarantee that they were able to provide, Bank of Industry was then viewed based on that rating. And so that enabled us to raise that funding. A number of things happened to make this possible because this was the largest transaction by any national DFI on the continent. The pricing was very significantly lower than the double digits that you would expect. We had to also do some innovation in terms of the structuring. Now, one of the things that we did, for instance, is that we looked at dual currencies. So the offer was placed into the market based on euro as well as dollar. Now, we all know that the pricing between euro and dollar, there's a difference of at least 200 basis points. That is significant. So by using dual currencies, we were able to, blend and bring the cost down. The second aspect of it was to be able to attract various pools of liquidities from the world. We layered the guarantee in the sense that we had two versions there, because before we approached the market, we did a non-deal roadshow. Went to Europe, went to America, went to the Gulf countries, went to Asia. And what we're hearing is that there were some liquidity, some regions that said, we prefer 100% guarantee. We don't want to take risk. Some others said, we don't mind a partial guarantee, so we'll be willing to take some Nigeria risk. So we had two tranches. Tranche 1, 100% guarantee. Tranche 2, 85% guarantee and 15% Nigeria risk, and priced accordingly. Now, what that did was that we were able to now attract different pools of liquidity based on their preferences. And this is one of the reasons that we were able to get the transaction up to that level of 2 billion. So that is on the upstream side. Now, having raised that money, you now have to deploy it into the market. In the market, you have MSMEs, you have youths, you have women-owned businesses, etc. There are challenges accessing the funds. Even though the pricing is affordable, there are issues of collateral, there are issues of so many other issues that actually become a challenge. And that is where, again, ATIDI and other credit insurance companies came in. We were able to secure support to guarantee for portfolio guarantees, for risk insurance, etc., credit insurance and all of that, first loss, etc., to guarantee the lending that we were making to the MSMEs, women-owned businesses, and the youths. And with that, we were then able to scale the deployment of these funds. ATIDI also helped in terms of supporting the subscribers to our offer by providing credit risk insurance, and that enabled them to have more capacity to take up the offer that we put forward. So we're really, really very, very happy with ATIDI and with all our various partners for all the work that they do. And what we would like to do, what we would like for the African countries and others to consider is we all have foreign reserves and all of that. We all have various funds in different pools. Why do we leave it in foreign countries trying to raise our reserves? Why don't we bring that money in to support the likes of ATIDI, AFC, etc., so that we can deploy this money on a sustainable basis? That's one of the thoughts that we would like to leave with you. The other thing is that, yes, African governments are challenged, but there are ways, innovative ways. For instance, we are owned by the federal government of Nigeria. The federal government, if you tell the federal government of Nigeria today to write you a check for $2 billion, it will be a struggle, given other priorities that they have. But they are able to provide a guarantee to a state-owned enterprise like BOI in order to access these pools of funding and to deploy it in a way that helps to grow the economy and make the changes that are required. So I will stop here for now. Happy to take questions. Thank you.
Thank you very much, Mr. Kange. A lot of food for thought there. And just very quickly, going back to this issue of export of raw materials, I was reminded of this quote by the African World Bank's Adesina, who said, "The export of raw materials is a door to poverty." I think that says it all. Thank you so much for mentioning, and I know that Mr. Ndawula also touched on that. So now, very briefly, because we've got about 10 minutes left, I'd like to leave the floor to you now, Mrs. Lopez, to take a market-wide view even further. From your position in international markets, what recent developments are you seeing that are helping to support African sovereigns and financial institutions? How do tools like insurance and guarantees, especially those provided by institutions like ATIDI, enhance investor confidence and enable capital mobilization?
Thank you very much. Thank you all. It's a pleasure to be here. Thank you, ATIDI, for inviting us to be here. So I will try not to repeat myself because of a lot of the previous panelists have touched on a lot of the subjects that I will be discussing as well. But I think I'll try to bring to you a different approach, so to speak, because at Crown Agents Bank, we're very, very committed to the region. We have very deep relationships with the financial institutions, private sector, and also the central banks in the region. So we are very proud to be here and committed, and we believe we have a lot of knowledge there, especially on the FX side and on the trade side. So I wanted to bring a little bit the discussion about the trade side, because we're all talking about long-term financing, we're talking about infrastructure projects, so I don't want to repeat myself and bring those discussions back, because I think you all have already touched on these very in depth. So in terms of, and of course I will bring my view as a bank, because we are a bank, as my previous panelists also mentioned, Takunda. We are very regulated, whether we sit in SA, whether we sit in London, which is my case. We are extremely regulated, and when we lend to emerging market countries, we are penalized by that, of course. So there's a lot of, and this is completely outside of our control, because these are regulatory requirements. So when we think about sovereigns, I think you guys have already touched on the sort of blended finance structures, how deep they can, how useful they can be in terms of improving pricing for the borrowers and crowdfunding with different sectors. So they can crowdfund with the commercial banks, they can bring the MDBs and DFI supports, and you have also touched that what we have now is not exactly even throughout the region, and it's not enough. We get that. But of course, having that option helps a lot the banks to be able to scale their appetite, so to speak. The other thing, I think, in terms of developments that is very important, and I think I include ATIDI there and the whole of the private insurance market, the credit insurance market, is the appetite for sovereign risk with credit enhancement. So that allows, of course, banks to underwrite more, distribute more, syndicate more. The other sort of recent development, I mean, not recent as in 24, recent in terms of the last few years, you have guarantee programs. You have the guarantees from the likes of MIGA, but you also have on the private sector from the DFIs, helping the banks on the short-term space. So I want to focus a little bit more on the short-term space, because I think, as I mentioned to you before, you have touched upon the long-term as well. So thinking about the short-term space, we see a lot of focus on how important short-term trade is for countries as well. So it's not just for the banks, it's not just about on lending to SMEs and making the sort of the economy work, but also in terms of the sovereign supply chains, whether that's on food imports, energies, commodities, etc. So the best case scenario for us as a bank, because of regulatory requirements and regulatory restrictions really and challenges, is to have an improved collaboration among the multilateral development banks, the DFIs, and the commercial banks. So you touched upon the first loss structures, we touched upon guarantee structures, we touched upon credit insurance as a whole. So whether that's ATIDI, whether that's AFC, a Frexim Bank, I mean, all of them would help us in a bank to be able to do more, so to speak. And specifically about the role of insurance and private credit insurance and ATIDI specifically, you mentioned on that before as well about de-risking. So why is that important for the banks? Because it can facilitate long tenors, short tenors, and it can especially tackle the restrictions that we have lending into higher risk markets. Insurance is really a very powerful enabler for trade finance. I'm talking specifically about trade finance, but it's a powerful enabler across the board, really. But even in short tenors, when we have trade transactions, insurance is a powerful enabler. Why? Because with credit insurance support, banks are able to syndicate transactions, but also originate more on a bilateral basis. So it's not just about distribution on a wider scale, on a syndicated transaction, but also on a bilateral basis. It enables the banks to scale the trade book, which is something that we want to do as well. So it's not about de-risking our current book, it's about being able to do more with the limitations that we have. So allows banks to manage concentration risks, which is needed across the board. It allows banks to tackle cross-border concentrations, single obligor concentrations, and improve returns, which of course is a major discussion. It's about optimizing the risk-weighted assets, which of course, as banks, as regulated entities, we have all the constraints there. And what we see more and more, and we want to see even further, is this broader willingness of insurers and DFIs to back short-term trade as well. So I think before you would have the DFIs, not so much the MDBs, but especially the DFIs, and some credit insurers looking much more in terms of project finance and infrastructure projects, long-term transactions. But, you know, there is a need there on the short-term side as well. Yeah, I think we also touched upon sort of tiered risk structures, first loss structures that you can do even on a portfolio basis, on a transactional basis. And I think all these tools, these risk mitigation tools, are really, really relevant for us to be able, as I said, to scale the book. And I pause here and I open for questions.
Thank you very much. So I'm looking at the time. We're running a little bit late, but let's take 2 questions. And after that, I would ask you to maybe pick the brains of our experts here over lunch. So are there any questions? Yes, gentlemen, please introduce yourself as well.
Okay, Madam Moderator, thank you very much. My name is Dave Haban. I represent COMESA. Now, let me start by just an example. You know, we have Association of Women in Business that covers the COMESA region. And they are mainly the SMEs. And for them, whenever they meet, the main question has been the cost of borrowing capital, to the point that they believe that if they set up their own bank, they will be able to access the same capital cheaply. But we keep telling them that this is not possible because it is linked to so many other factors, like what you have said. And these women in business, they form the 70 or 65% of the women in Africa and the youth in Africa who don't need a lot of money. For them, you give them $2,000 to $3,000, they will start a small business quickly. And the same people will be hiring between 3 to 4 people and keep the economy growing. But why can't we have facilities for these people who are really running the economy in Africa? They form the 60 to 65% of the African population, the youth and the women in business, and they really don't need a lot of money. For them, 3 to 4, 5,000 can attend to their needs. But we are only talking about the big capital needs, whereas we are ignoring that part of the society that need our help more. I just wanted you to be aware of it because that is the reality on the ground. And how do we help them? Thank you very much.
Thank you very much. Any reactions to what we've heard?
Thank you very much for that comment. I couldn't agree with you more. Women represent, like you said, 50, sometimes 60% of the population. And they are the least, they are the most disadvantaged when it comes to that, raising capital. Now, at Bank of Industry, because we're a national DFI, our focus is to ensure that we carry everybody along in terms of the development effort. In Nigeria, we have over 39 million MSMEs. About 70 to 75% of them are women, women-owned businesses. So our calculation is that if we're able to support even 10% of that group to grow their business to an extent where they're able to hire one more person, that's about 3.9 million jobs created right there. Now, the impact on the society overall of that kind of growth, it stretches, it expands, it's scalable, you know? And so we have a dedicated group that is focused on supporting women entrepreneurs. And one of the key challenges they have always had in accessing funding is collateral. In certain countries, women are not allowed to inherit, right? So the issue of collateral is always a big one. The second aspect is capacity building as well, right? You start a small business. As the business grows, of course, your business model has to change. You have to put in governance structures because initially when you start, you're the chairman, you're the chief marketing officer, you're the accountant, you're the lawyer. But when you begin to grow the business, then you need to put in governance structures so that the business will be sustainable. You know, so in order to access that funding, what we have done, for instance, is we have been able to secure a partial guarantee from Africa Guarantee Fund with an initial amount of $50 million. We're able to provide portfolio guarantees of up to 75% of the loan amount for our women entrepreneurs. And for other MSMEs, it's about 50%. Now, that has helped, and it comes with capacity building as well, in order to help them put in the right structures for the business to grow. The other issue, which we found, which was surprising, but we don't understand why that has not sunk into is factored into most financial analysis and all of that, is that in terms of loan performance, the women are far better than men. I am very sorry for the men in the room. I am not saying, I know I have to surrender my man card. I don't care. The truth is that, and the data shows it, the women are better managers of funds than the men. So as a bank, I want to minimize risk and all of that. Why am I not supporting this segment that is delivering? And the other thing is that that's over 50% of the population. So if you're supporting only the remaining 40 or 50%, you're fighting with one hand behind your back. You don't have everybody on the table, which is what you need to grow. So I fully agree with you. I mean, I couldn't agree more. Let's do more in that aspect. Thank you.
So do you mind if I ask you a question? Yes. In terms of, I think one of the things you mentioned, of course, the collateral, et cetera, but also in terms of governance structures, are you able to provide sort of technical assistance to them? I think that could go a long way as well.
Yes, we're able to do that. What we have done is that we have recruited over 400 consultants to cover the country, and they are professionals, and their job is to handhold these entrepreneurs, help them, for instance, to present bankable projects to the bank, feasibility studies, business plans, etc., and also help them to grow as they grow, governance structures and all of that. And we pay the fees, not the women entrepreneurs. We pay based on achievable milestones. That has helped a lot. Thank you.
Thank you very much for your question.
Follow up, yes, yeah. No, thank you very much. Now, you see, here we are talking about 65% of the population, which is of the continent. And like you said, we are ready to throw away our man card. Because really these women, they are not only reliable and also pay on time, but they are the most committed. And they can work more than the normal 10 or 8 hours that we do. they work at least 12 hours. But they are the most denied people. For me, that's where we need to really focus, because they can create employment in our continent. Like you said, if you give them at least every year or every 6 months, they can create between 2 to 3 jobs if you provide them with capital. And for me, the solution, of course, we have that bigger one, but we have to also start from the grassroots. Let's address the problems of grassroots too. Of course, we have all those things. I heard the gentleman from African Union, but he never mentioned that collateral that we are talking about. He never mentioned what do we need to do with the 65% of the population of the continent who really want to push growth and wealth in the continent. And maybe this is where we are missing.
All right, thank you very much. Incredibly pertinent question. And let's all remember as well that Africa has the highest rate of female entrepreneurs as well. So this was very, very important to mention. Do we have one very quick question before wrapping up? Or shall we go to a wrap-up? All right, let's proceed to a wrap-up then. Thank you very much to you all. And now I'd like to call on Mr. Benjamin Mugisha, Chief Underwriting Officer at ATIDI, to wrap up everything that we've heard this morning.
I think really beyond wrap-up, it's just to start with the traditional African expectation, which is to thank all of you. So I'd like to start by thanking all of you. Over the last maybe 6 or 7 years, we've always looked to say, how can we bring experts, investors, stakeholders to one table where we can have a conversation that really helps to drive innovative thought. And I hope that today's roundtable was another step along that journey. So the wrap-up is just to say that, one, we would like to thank everyone who has attended. The concept was around interactive conversation, and I think one of the things we liked was the way the interactive conversation developed over the course of these 2 or 3 hours. I would also like to thank our hosts, the government of Angola, for putting all this together, IC Publications for coordinating everything we've done, the people who have coordinated the discussions, either as panel coordinators, I will not say moderators, as participants, and also yourselves as attendees. So on behalf of the management of ATIDI, on behalf of myself and my team, the underwriting team and the comms team at ATIDI, as well as the organizers and the staff who are online, I'd just like to say we do value the partnerships that we have. We have seen that there are local partners and DFIs on the continent who are working to provide solutions for the continent. I think we've also heard from the governments around risk participation and risk assessment and how international risk perceptions do impact this continent. We've also heard from financial institutions talking about how constraints sometimes do not reflect the reality of their impact and how more could be done if there was more level playing field. And then we've heard from the institutions that try to provide a fair representation of the risk profile relative to all other institutions on the globe. And I think here we're talking about rating agencies. And I think that was all very useful because what we're trying to do when we have these frank dialogues is to actually provide perspectives. So you've seen the perspectives from all these different participants so that we can see how these perspectives can be moderated. ATIDI is a risk provider and therefore mitigated where we play a part so as to reduce the cost of capital. My closing statements would be the work we do is about livelihoods. It's about, the small and medium entrepreneur, the young African who is looking to the future to see if they can have
meaningful, productive contribution to the lives of the people they love. It's about governance and the structures that we are actually trying to ensure there's transparency in information. It's about regional integration and trade on the continent. It's about infrastructure development and financing. It's about mobilizing private capital, and that's why we have our partners from the London market who actually sometimes are left behind in this discussion, and yet they are important investors as well, and how this entire blending of capacities helps to deliver to stakeholders, the governments, and the people on the continent real value add through innovation at a sustainable, in a way that is sustainable. So thank you all of you for being part of this conversation. We promise to continue to see how we can create these forums for continued discussion. And I would really say maybe a round of applause to all of us for having taken the time to be here. Thank you so much. I think in the afternoon we will have some continued dialogue, so maybe I'll hand back for a conversation around that. Thank you.
Thank you so much, Mr. Mugisha. That was a perfect conclusion to our talks here this morning. So very, very briefly, let's all have lunch on the 24th floor. Please be back here in 1 hour, in fact, at 2 p.m. sharp for our country's presentation. And we'll make sure that we finish at 3:15 on the dot as well. So lunch until, well, something to 2 p.m. and we'll be back here at 2 p.m. on the dot. Thank you to you all.
Ora viva. Alô. 1, 2. Teste. Good morning. Alô. You okay? Yes. Ligue agora. Yes. Testing. All good?
nossas certezas e nos embriagaremos na carne dos seus frutos. As crianças nascerão sem metas nos olhos e as suas mãos sujar-se-ão com o mel do nosso olhar. As crianças serão crianças, negras, loiras ou brancas, serão pétalas da mesma flor, serão pétalas da mesma flor, serão pétalas da mesma flor.
O pregão da vossa e minha é mesmo como os seus panos, já não tem a cor berrante que tinha nos outros anos. A vossa está velhinha, mas de manhã, manhãzinha, pede licença ao reumato e não passo nada prático. Rasga as estradinhas na areia, rasga as estradinhas na areia, lá vai para o cajueiro que se levanta altaneiro no roteiro dos caminhos das gente que vão para baixo, nem criados, nem padreiros, nem alegre lavadeira desta nova geração das venidas de Alcatrão. Ó velho fraco, o pregão da velhinha quitandeira, ó velho fraco, o pregão da velhinha quitandeira. Mamauê, quaque, maquezo, maquezê, quaque, maquezo, maquezê, quaque, maquezo, maquezê, quaque, maquezo, maquezê. O pregão da vossa e minha é mesmo como os seus panos, já não tem a cor berrante que tinha nos outros anos. A vossa está velhinha, mas de manhã, manhãzinha, pede licença ao reumato e não passo nada prático. Rasga as estradinhas na areia, rasga as estradinhas na areia, lá vai para o cajueiro que se levanta altaneiro no roteiro dos caminhos das gente que vão para baixo, nem criados, nem padreiros, nem alegre lavadeira desta nova geração das venidas de Alcatrão. Ó venho fraco, o pregão da velhinha quitandeira, ó venho fraco, o pregão da velhinha quitandeira. Mamauê, quaque, maquezo, maquezê, 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 quaque, maquezo, maquezê. Maquezo, maquezê, quaque, maquezo, maquezê. Quaque, maquezo, maquezê, quaque, maquezo, maquezê. Quaque, maquezo, maquezê, Quaque, maquezo, maquezo. Quaque, maquezo, maquezo. Quaque, maquezo, maquezo.
Boa tarde. Rebonjour à tous. Good afternoon. I hope that you enjoyed your lunch. So now we move into one of the most strategic segments of our program, the country investment briefings, where investments meet opportunity. Today we'll hear directly from two countries that are pushing the boundaries of reform, development and resilience and are actively opening doors to partnerships. You will be given insight into each country's macroeconomic outlook, flagship projects and funding opportunities, crucial intelligence for investors looking to make meaningful impact on the continent. And we'll begin with Angola, a nation on a transformative path, making bold moves in privatization, infrastructure and critical minerals. So let's dive into seeing how this country is reshaping its investment landscape. And to do so, let's all welcome Mr. Bruno Batista, Head of Promotion and Private Investment at APEX, that's the Angolan Private Investment and Export Promotion Agency. Round of applause for Mr. Batista.
Boa tarde. Muito boa tarde a todos. Antes de mais, gostaria de agradecer aqui à organização por endereçarem este convite à IPEX para então falarmos um pouquinho sobre o que é a IPEX e os apoios que a IPEX presta ao setor privado nacional e estrangeiro. Bem, vou começar por um tema, por quem investir em Angola. Bem, o mercado angolano é um mercado emergente, com um potencial enorme de crescimento, com políticas favoráveis ao investimento privado, uma população em crescimento, uma população jovem, e o país está localizado estrategicamente para ser um hub aqui a nível da região. É importante dar nota aos investidores aqui presentes que ao investir em Angola, terão acesso aqui a um mercado, não apenas um mercado nacional, mas um mercado aqui regional, com destaque para a República Democrática do Congo, que apresenta um mercado consumidor de cerca de pouco mais de 80 milhões de consumidores, nesse caso. Isto por si só já representa uma grande oportunidade para investir em Angola. Importa referir também que o país dispõe de recursos naturais, de florestas, uma vasta costa marítima, terras aráveis, e também o país tem cerca de 38 dos 50 minerais cruciais para o setor industrial. Além disso, os setores prioritários foram identificados na lei de investimento privado, podem substituir as importações que neste momento, para o setor produtivo, para o setor alimentar, são cerca de 1 a 2 milhões de dólares. Ou seja, há aqui uma grande oportunidade para investir na produção nacional, porque o governo está apostado em aumentar a produção nacional e reduzir as importações. Há programas aqui, por exemplo, o PRODESE, que é um programa muito importante, que contempla também algumas linhas de financiamento, cujo objetivo principal deste programa é aumentar a produção nacional e também diversificar as exportações. As exportações nacionais, Angola hoje praticamente, ou seja, cerca de 90% ou mais de 90% das exportações nacionais são de petróleo. Portanto, há este desafio por parte do governo, e a IPEX também está envolvida neste desafio para então diversificarmos as nossas exportações. Ao longo dos últimos anos, o governo também tem vindo a implementar algumas reformas para a melhoria do ambiente de negócios. E aqui ao nível do investimento privado, a IPEX também fez parte destas reformas. Até 2018, existiam várias entidades que tratavam de matéria de investimento privado. No entanto, fruto destas reformas, criou-se a IPEX, ou seja, as demais instituições, ou as várias instituições que tratavam da matéria de investimento privado foram extintas, e deu-se a criação da IPEX para que o investidor, quando chegar a Angola, não ter a necessidade de contactar várias instituições, e tudo que é assunto de matéria, ou seja, tudo que é matéria de investimento privado, tratar apenas com a IPEX. E por via da IPEX, então, nós podemos encaminhar os investidores para os demais órgãos da administração pública. Também fruto destas reformas, em 2020 criou-se a Janela Única de Investimento, que é um modelo operacional que dá poderes à IPEX para, em nome do investidor, tratar de alguns assuntos. Por exemplo, assuntos ligados aos vistos, assuntos ligados a licenças, assuntos ligados à obtenção de terras. A ideia aqui é fazer com que o investidor foque apenas na implementação do projeto. Tudo aquilo que tem a ver com serviços da administração pública, a IPEX então foi criada para apoiar e ter um canal verde junto das demais instituições públicas para, de forma célere e dentro dos prazos definidos por lei, termos então respostas às solicitações ou necessidades dos investidores. Fruto ainda das reformas para a melhoria do ambiente de negócios, ou seja, a lei do investimento privado em 2021 sofreu uma ligeira alteração, que culminou com a introdução do regime contratual. O regime contratual é um regime que dá a possibilidade dos investidores privados poderem negociar aquilo que são os benefícios fiscais e outras facilidades para o projeto, com a IPEX, a Administração Geral Tributária e outras instituições de Estado que possamos entender ser relevantes para o projeto. Igualmente, a nível judicial, por vezes alguns promotores ou alguns projetos têm situações de litígio, portanto, a lei também dá a possibilidade de os investidores recorrerem a meios alternativos para então verem os seus assuntos resolvidos, como o caso de mediação, negociação. Aqui também dar nota que em 2022 foi possamos assim dizer, criado o Código de Benefícios Fiscais, que também é um instrumento que visa dar mais garantias, dar mais benefícios aos investidores, qual eu irei explicar com mais detalhes nos próximos slides. Também em 2023, por via de um decreto presidencial, o governo angolano isentou cerca de 98 países, ou seja, cerca de 98 países não têm a necessidade de obter um visto de turismo para entrar no nosso país. Espero que alguns dos investidores aqui presentes tenham sido abrangidos por esta norma que foi implementada em 2023. Portanto, a nível do investimento privado, estas são algumas das reformas, embora outras reformas a nível macroeconômico, a nível fiscal, também foram implementadas desde 2018. Bom, a IPEX, como referi, é uma instituição do governo angolano e esta agência tem dois papéis principais. Primeiro é a promoção das oportunidades de investimento aqui em Angola e atração de investimento. E o segundo papel é apoiar as empresas nacionais a exportarem os seus produtos e também aquelas empresas que pretendem internacionalizar os seus serviços. A IPEX também tem este papel de prestar o devido apoio, seja por via de contato com potenciais parceiros no exterior, seja por via de apoio na elaboração de estudos de mercado e outras necessidades que os empresários nacionais possam precisar para então exportarem e internacionalizarem os seus serviços. Portanto, estes são os dois papéis principais da IPEX. Em termos de oportunidades de investimento, em jeito de brincadeira, gosto sempre de dizer que Angola é um país virgem, né? E temos oportunidades em quase todos ou em todos os setores, possamos assim dizer. Vou destacar aqui apenas alguns. Do setor da agricultura, nós ainda importamos em termos de bens alimentares, ainda há muita importação. Na minha intervenção inicial, referi que importamos, em termos de bens alimentares, o equivalente a 1.000 a 2.000 milhões de dólares por ano. Portanto, isto aqui representa uma grande oportunidade para apostar na produção nacional. No setor do turismo, temos muitas paisagens, temos alguns ativos também aqui a nível do programa de privatizações, algumas unidades hoteleiras que estão disponíveis para então serem privatizadas. Já fiz referência aqui à isenção de vistos para cerca de 98 países. Isto por si só também contribuirá para um aumento do turismo aqui no nosso país. Em termos ou seja, no setor da construção e infraestruturas, aqui gostaria de destacar um projeto muito importante, não só para Angola, mas também aqui a nível da região, que é o corredor do Lubito. Não irei dar muitos detalhes acerca desta infraestrutura, mas em termos gerais, para quem não conhece, o corredor do Lubito é uma linha férrea, né? Se olharem aí para o mapa de Angola, aí a linha do meio, é uma linha férrea que estende-se do Porto do Lubito até a fronteira com a República Democrática do Congo, que há cerca de 1 ou 2 anos, o governo angolano previa de uma concessão, portanto, um consórcio de 3 empresas faz a gestão deste corredor. Portanto, ao longo deste corredor há muitas oportunidades, desde centros logísticos, investimentos no setor da agricultura, investimentos no setor mineiro, e é uma infraestrutura muito importante, tanto para o escoamento dos produtos locais, como também a importação de matéria-prima. Aqui importa referir, depois dos investidores decidirem em que setor investir, é importante fazer um registro dos seus projetos na IPEX para que nós possamos prestar todos os apoios que eu referi anteriormente. E ao fazer o registro por via da IPEX, os investidores têm acesso a vários benefícios fiscais. E a lei do investimento privado prevê três regimes de investimento. Temos o regime de declaração prévia, que aplica-se, ou seja, os benefícios fiscais que constam neste regime aplicam-se aos projetos que não estão enquadrados nos setores prioritários, ou seja, aqueles setores como comércio e prestação de serviços. Portanto, o Código de Benefícios Fiscais já define quais são os incentivos a atribuir para projetos enquadrados neste regime. A seguir temos o regime especial que aplica-se aos projetos nos setores prioritários. Depois temos o regime contratual que os projetos para estarem enquadrados neste regime devem cumprir com dois requisitos. O primeiro requisito é o valor de investimento. Ou seja, o projeto deve estar orçado em 10 milhões de dólares ou mais de 10 milhões de dólares e criar pelo menos 50 postos de trabalho para cidadãos nacionais. Cumprindo com estes dois requisitos, o investidor então tem a possibilidade de negociar os benefícios fiscais e outras facilidades para o seu projeto. Diferente dos outros regimes de referência, os outros regimes não dão a possibilidade de negociar. O Código de Benefícios Fiscais define, dependendo da zona, dependendo da província em que o projeto for implementado, o código já define quais são os incentivos a aplicar ao projeto. Aqui neste slide, apenas para identificar quais são os impostos que têm benefícios fiscais. Temos aí o imposto predial, temos o imposto industrial, imposto sobre a aplicação de capitais e o imposto de selo. E nas colunas a seguir, então, o período pelo qual poderão gozar destes benefícios e também a taxa de redução. Aqui temos então os benefícios fiscais para os projetos no regime especial ou nos setores prioritários. Dependendo, como referi, dependendo da zona ou da província em que o projeto irá implementar-se, então temos aqui as várias balizas ou as várias reduções. Que só a título de exemplo, um projeto no setor da agricultura a ser implementado na província de Luanda, enquadra-se na zona A. Para o imposto industrial, há uma redução de 20%. E para este imposto, poderão gozar deste benefício por um período de 2 anos. Mas este mesmo projeto for implementado, por exemplo, mais para o interior do país, por exemplo, na província de Cunene, a província de Cunene enquadra-se na zona C, há uma redução de cerca de 80% por um período de 8 anos. Portanto, esta é mais ou menos a diferença entre as quatro zonas de desenvolvimento. Depois temos o regime contratual, como referi anteriormente. O investidor aqui neste regime tem a possibilidade de apresentar aquilo que, ou seja, fazer uma proposta de quais são os melhores benefícios para os seus projetos e depois numa base negocial da qual participam a IPEX e a Administração Geral Tributária, são discutidos então os melhores benefícios a atribuir aos projetos. Importa referir também, para além dos benefícios fiscais, temos também benefícios aduaneiros, ou seja, para aqueles projetos que têm a necessidade de importar máquinas, importar equipamentos que sejam necessários para implementar os seus projetos. Estes então estão isentos do pagamento de direitos aduaneiros, estando apenas obrigados a pagar o IVA. Mas as formas de pagamento também podem aqui ser facilitadas e negociadas. Pronto, de modo geral, era isto que tinha para apresentar e mantenho-me disponível para qualquer dúvida, qualquer pergunta que tenham. Muito obrigado. Não sei se alguém tem alguma questão, se está tudo esclarecido. Mas também eu estarei por aqui até o final da sessão, se tiverem nenhuma pergunta por agora. Depois uma pergunta aí. Por favor. speak a little bit up, please?
Sorry. What are the country's programs with regards to carbon credits?
Muito obrigado pela pergunta. Portanto, este tema dos créditos de carbono é um assunto, por acaso, também já temos recebido vários investidores interessados nesta matéria, mas de momento daquilo que é conhecimento da IPEX, há necessidade ainda de criar-se uma legislação, né, para que nós possamos então definir como é que o governo pretende tratar desta matéria. De momento não há uma legislação para esta matéria, portanto, e é um assunto que talvez o Ministério do Ambiente e o Ministério dos Recursos Minerais poderão passar melhores informações. Caso precisar, nós podemos também fazer a ponte com estas instituições.
Thanks very much, and thank you for your presentation.
Hi, thank you very much for your presentation. You gave a long list of the tax incentives that are available to separate industries. Is that uniform across the board regardless of nationality of the investor? And have you had, since those have come into play, has it resulted in an uptick in investment?
Bom, os benefícios fiscais são atribuídos independentemente da nacionalidade do investidor. Se o investidor é nacional, estrangeiro, da África do Sul, Quênia, Estados Unidos, não há aqui uma diferenciação em termos de origem do investidor. Portanto, são atribuídos com base no projeto, né, e não com base na nacionalidade.
Thank you.
Sim. Não há mais questões. Muito obrigado pela vossa atenção, mas depois da sessão estaremos aqui disponíveis para continuarmos a falar. Tá? Muito obrigado.
Thank you very much, Mr. Batista, for such a compelling presentation. And I think that we heard Mr. Batista very loud and clear. Angola has potential, is ready to do business, and APEX is here to help. Thank you one more time. So now we turn to Senegal, a country that continues to impress with its strong growth, economic reforms, and visionary planning. With mega projects like the 1.2 billion Dagné port and the Train Express Régional, Senegal is not only thinking big, it's building big. Let's now hear from the countries and its plans to take investment partnerships to the next level. And let's welcome to do so Mr. Amadou Birahim Gueye, conseiller technique du ministre des Finances et du Budget du Sénégal. Bienvenue, Monsieur Gueye.
Ici parce que j'aurais besoin de traduction après. Comment? Je prends. Bonsoir à tous. Donc, je voudrais peut-être à l'entame de mon propos remercier ATIDI pour l'occasion qu'il nous offre de parler un tout petit peu du Sénégal. Vous connaissez certainement déjà. Et des projets qui sont en cours, qui sont de notre point de vue, des sources d'opportunités pour les investisseurs. Le précédent intervenant qui a parlé de l'Agence des investissements de l'Angola, je disais tout à l'heure que, à quelques exceptions près, une bonne partie de son intervention est également valable au Sénégal, parce que nous avons aussi une agence des investissements qui a été créée depuis les années 2000, qui a pour fonction de promouvoir les investissements privés avec quelques avantages. L'option que nous avons choisi, c'est de parler un tout petit peu de la stratégie qui a été mise en place par les autorités, n'est-ce pas, pour un tout petit peu amorcer le développement du pays. Ah, c'est bon. Ah, je pensais que... Voilà. Donc, sur ce premier diapo, nous avons essayé de présenter le Sénégal, n'est-ce pas, son régime politique, qui est un pays stable, un pays dans lequel les institutions sont très fortes. Et ce sont ces institutions qui ont conduit à avoir trois alternances démocratiques. Et le troisième est intervenu il y a environ 15 mois. N'est-ce pas? Et je reviendrai tout à l'heure. Et dans ce cadre également, le Sénégal est membre d'institutions régionales continentales qui renforcent sa crédibilité économique et institutionnelle du pays. C'est important pour nous parce que la participation à ces organisations facilite un tout petit peu renforce la stabilité du pays. Et parmi les organisations, on a cité l'UEMOA, n'est-ce pas, la CEDEAO, l'UEMOA qui offre aux investisseurs non pas juste un cadre juridique, mais également un marché avec le marché commun de l'UEMOA. À ces organisations régionales, on peut rajouter d'autres organisations ou bien d'intégration juridique, notamment l'Organisation pour l'harmonisation en Afrique du droit des affaires et le marché commun des assurances, qui sont toutes des institutions régionales et continentales qui renforcent un peu la stabilité et la crédibilité institutionnelle du pays. Sur le plan économique, l'événement ou bien l'information pertinente, c'est le début de la production du pétrolière qui a démarré en 2024 et la production gazière en 2025. Ces événements qui fait rentrer le pays dans le pays, le Sénégal parmi les pays producteurs d'hydrocarbures, n'est-ce pas, soutiennent un tout petit peu la vision des autorités et permettent un peu conduisent un peu à une projection de croissance du PIB à 8,8% sur l'année 2025. Je crois que l'une des présentations de ce matin avait annoncé une projection des partenaires à 8,4. Nous sommes à 8,5 et soutenus un peu par la production pétrolière et gazière. Je disais tout à l'heure que nous avons des institutions fortes qui ont conduit à des alternances démocratiques. Et la dernière étant intervenue en 2024, en mars 2024, il y a environ 15 mois maintenant. Et les nouvelles autorités issues de ces élections ont élaboré une vision pour les 25 prochaines années qu'on va appeler Vision Sénégal 2050, n'est-ce pas, qui ambitionne de mettre en place un Sénégal souverain, juste et prospère. Donc voilà cette vision qui a été déclinée, élaborée par les nouvelles autorités. Cette vision pour les 25 prochaines années a été déclinée en master plan de 10 ans, n'est-ce pas? Et ce master plan de 10 ans également a été décliné en plan quinquennal. Et le premier plan, c'est le plan qui a démarré en 2025 jusqu'en 2029 avec un objectif de promouvoir un développement endogène et durable porté par des territoires responsabilisés, viables et compétitifs. Cette stratégie nationale de développement est déclinée en plusieurs axes. Nous sommes à 4 axes. Le premier axe, c'est une économie compétitive. Le deuxième axe, c'est sur le capital humain de qualité et économie sociale. Le troisième axe, c'est sur le développement durable. Et le quatrième axe, comme vous le savez, c'est sur la bonne gouvernance et l'engagement africain. Notre propos ici va uniquement porter sur le premier axe, c'est-à-dire une économie compétitive avec les pistes ou bien les moteurs de croissance qui sont identifiés principalement dans les secteurs miniers et des hydrocarbures. Et dans le cadre de cet axe relatif à l'économie compétitive, nous ambitionnons le développement des moteurs de croissance dans les territoires compétitifs. Et à ce titre, nous avons identifié quelques moteurs de croissance, notamment la transformation à travers les industries extractives, l'industrie agroalimentaire, l'industrie manufacturière et les services à valeur ajoutée. Les nouvelles autorités ont élaboré ce nouveau cadre politique qui vise à libérer le potentiel économique des Sénégalais à travers des projets structurants. On le verra, il y a des projets structurants qui sont conçus et élaborés par les nouvelles autorités avec un ensemble de mesures visant à attirer l'investissement. Et à ce titre, on a noté la réforme du Code des investissements afin d'en faire le seul régime d'exception. Le renforcement de la recherche et de l'innovation, on y reviendra parce que cette stratégie élaborée par les autorités a fait l'objet d'autres stratégies, notamment le New technologique et la stratégie d'industrialisation sur lesquelles je reviendrai tout à l'heure. Les stratégies de développement des secteurs productifs, on a évoqué tout à l'heure les mines, donc j'y reviendrai également tout à l'heure, la revue des procédures administratives, la redynamisation des zones économiques spéciales et les agropoles. Les zones économiques spéciales sont des zones mises à la disposition des investisseurs privés dans le cadre d'un peu des investissements qu'ils voudraient également faire et qui s'est géré par le pendant de l'agence qui a fait la première présentation, c'est-à-dire l'agence de gestion des investissements qu'on appelle APIX SA au Sénégal et dont le site c'est investosénégal.sn. Maintenant, toutes ces actions sont adossées à des projets concrets. Donc, lors de l'introduction tout à l'heure, on a évoqué un certain nombre de projets, notamment la réalisation du train express régional. Donc, on peut y rajouter la réalisation du port de Ndayan et d'autres projets qui sont en cours. Et ici, dans le cadre de cette présentation, j'ai énuméré quelques projets qui ne sont pas les seuls. Les autres projets, vous pouvez les voir sur le site que j'ai évoqué tout à l'heure, investinsénégal.sn. C'est-à-dire le développement de la filière nationale intégré du phosphate et de l'engrais. Ça également, ça fait l'objet d'un diapo, je vais vous en parler tout à l'heure. La création d'une industrie locale de transformation, la réalisation de projets de gestion du réseau de gazoduc du Sénégal. Comme je l'ai dit tout à l'heure, le Sénégal produit maintenant du gaz. Donc, il y a un important projet de construction d'un réseau de gazoduc au Sénégal avec une société qu'on appelle Réseau gazier du Sénégal. Le positionnement du Sénégal en tant que hub technologique en Afrique de l'Ouest, ça également, ça a fait l'objet d'une stratégie qu'on appelle le New technologique, et la structuration d'une industrie en pétrochimie et la transformation d'AIBD en aéroport aéroportuaire africain. AIBD, c'est la société de gestion de l'aéroport de Blaise Diagne, n'est-ce pas? L'idée, c'est un petit peu de transformer cet aéroport en hub aéroportuaire avec notre compagnie aérienne et le développement des aérodromes nationaux. Je disais tout à l'heure que le Sénégal a démarré la production des hydrocarbures et 2024 a marqué un tout petit peu qui est le point de départ de l'exploitation, l'entrée du Sénégal dans l'industrie des hydrocarbures. Et à ce titre, on a évoqué ici. Voilà. Et à ce titre, on a évoqué ici les trois projets pétroliers et gaziers. Le premier, c'est le projet Sangomar, qui est un projet pétrolier et gazier sur le champ offshore des côtes sénégalaises. Et la phase 1 de production du pétrole concerne plus d'un tiers du potentiel pétrolier de Sangomar. Ensuite, on a un autre projet gazier, cette fois en relation avec le pays voisin qui est la Mauritanie, le Grand Tortue Ahmeyim, n'est-ce pas, qui est un projet gazier sénégalo-mauritanien dans le bassin de la Tortue. Et les ressources totales de GTA sont estimées à plus de 15 000 TCF, réparties équitablement entre le Sénégal. Et ce projet a démarré sa production en janvier. Et la première cargaison a été, n'est-ce pas, faite en avril 2025 et génère des ressources. Maintenant, il y a un troisième projet qui est en cours, je dirais, de développement. C'est le projet Yakarteranga que nous développons en rapport avec Cosmos, qui a 90% du projet, le Petrosen, qui est la société de pétrole du Sénégal, qui a 10%, dont les parts peuvent être portées à 35%, conformément un peu au code pétrolier. Maintenant, on a voulu évoquer l'exploitation du pétrole et du gaz parce que tout simplement, c'est des sources de revenus. Tout à l'heure, je disais qu'on a projeté une croissance de 8,8%, mais sur ces croissances de 8,8%, 3% proviennent de l'exploitation du pétrole et du gaz. Les prévisions de recettes attendues sont de 73 milliards en 2025, 88 milliards en 2026 et 155 milliards en 2027. Voilà un tout petit peu pour ce qui concerne les hydrocarbures. Concernant les mines, le Sénégal a élaboré également une stratégie, n'est-ce pas, minière coordonnée pour développer le secteur industriel. L'idée, c'est en fait de définir et de mettre à jour la politique et la réglementation minière, n'est-ce pas, pour stimuler la croissance dynamique du secteur minier sénégalais. Et à ce titre, nous avons identifié deux secteurs. D'abord, le secteur aurifère. Le secteur aurifère qui est le secteur de l'exploitation de l'or, n'est-ce pas, qui est concentré dans certaines zones du Sénégal. L'or étant la première exportation minière du Sénégal avec trois grandes activités, notamment à Sabodala, à Mako et à Karakaina, et qui produit ensemble 12 tonnes d'or, qui ont produit ensemble 12 tonnes d'or en 2023. Donc, il est important également de préciser également que ces sociétés d'exploitation minière, l'État est actionnaire à hauteur de 10% et génère également des revenus pour l'État en tant qu'actionnaire. L'idée également, l'autre aspect concernant la politique minière coordonnée, c'est une industrie minéralière lourde. Parce que le Sénégal est également producteur de zircon, d'ilménite, de leucocyte et de rutile. Donc, il y a un projet important de hub minier régional, ça c'est important également pour les investisseurs, qui est une initiative stratégique multisectorielle pour stimuler la croissance. L'idée, c'est que c'est un projet qui est estimé à 509 milliards de francs CFA, avec un financement privé attendu de 330 milliards de francs CFA. L'objectif est de transformer le Sénégal en un point de référence pour les opérateurs miniers établis en Afrique de l'Ouest, en leur fournissant les équipements, les services et les ressources humaines nécessaires. J'ai évoqué les hydrocarbures. Ensuite, la stratégie minière, mais à l'intérieur de la stratégie minière, il y a une sous-stratégie qu'on pourrait appeler la stratégie phosphate. Parce que le Sénégal est également producteur de phosphate qui est exploité donc, à Tivaouane, n'est-ce pas, et dans le nord au niveau de Matam. L'idée, c'est que le phosphate qui est actuellement produit au Sénégal est principalement exporté. Et il y a une stratégie industrielle qui a été élaborée par le ministre de l'Industrie. D'ailleurs, il a la présentation en Conseil des ministres avant-hier. L'idée, c'est de voir comment maximiser la création de la valeur à partir des ressources de phosphate. Et à ce titre, en relation avec l'OCP, qui est l'Office chérifien du phosphate du Maroc, qui est une entité, je dirais, centenaire, donc le gouvernement veut un petit peu développer une industrie pour renforcer ou bien transformer les phosphates au niveau central. Et à ce titre, la projection est de créer une holding des engrais, une société détenue à 100% par l'État et qui va détenir le titre minier des engrais et qui va un petit peu essayer de mettre en place des unités industrielles pour la transformation du phosphate. L'idée, c'est de créer des business units, 4 business units, un sur l'exploitation minière, un autre sur l'engrais, un troisième pour l'ammoniac et l'urée, et un quatrième pour les énergies renouvelables. Donc voilà un petit peu la stratégie minière qui est en train d'être, la stratégie de phosphate qui est en train d'être mise en place par le ministère en charge de l'industrie, avec des objectifs pour assurer l'autosuffisance du Sénégal en engrais et essayer également de s'ouvrir au marché pour l'exportation des produits issus de la transformation du phosphate. La dernière stratégie sur laquelle je vais revenir, c'est la stratégie du numérique. À la suite de l'adoption de la vision 2050, le président de la République a lancé il y a environ 3 mois, au mois de mars dernier, une nouvelle stratégie numérique dénommée le New Deal électronique. Et dans ce cadre, dans le cadre de ce New Deal, donc le New Deal technologique plutôt, dans le cadre de ce New Deal, on a l'ambition de créer une société numérique, un pays de services à forte valeur ajoutée à l'horizon 2034. Donc là, vous voyez sur le premier master, sur la période du premier master plan 2025-2034, donc on envisage également, on ambitionne d'avoir une société numérique et un pays de services à forte valeur ajoutée. Cette stratégie est articulée sur 4 axes. Le premier, c'est la souveraineté numérique. L'objectif est de garantir l'indépendance technologique. Le deuxième, c'est la digitalisation des services publics. La digitalisation des services publics qui va participer un tout petit peu à l'amélioration des affaires, de l'environnement des affaires, le développement de l'économie numérique et faire du Sénégal également un leader africain dans le numérique. Cette stratégie déclinée en 4 axes a identifié 12 programmes prioritaires. Les 12 programmes prioritaires sont là. Donc, je vous fais l'économie de la lecture. Ce qu'il faut peut-être retenir à ce niveau, c'est que pour ces 12 programmes prioritaires, chacun de ces programmes a fait l'objet d'une évaluation financière avec l'identification des besoins de financement, plutôt avec l'identification des financements déjà obtenus par l'État et des besoins de financement qui devront être recherchés, qui seront de notre point de vue, autant de sources, n'est-ce pas, d'investissement pour un investisseur qui serait intéressé, sachant qu'au-delà de la présentation de ces stratégies, comme l'a indiqué tout à l'heure notre prédécesseur, on a un environnement attractif pour les investisseurs avec l'agence, comme je l'ai dit tout à l'heure, de promotion des investissements, les réformes en cours qui sont en train d'être effectuées du Code des investissements, du Code général des impôts et du Code des douanes pour un tout petit peu accorder aux investisseurs quelques avantages permettant un tout petit peu de développer leur investissement et de gagner des profits. Voilà ce que j'avais prévu de partager avec vous. Vous constaterez que je ne suis pas forcément revenu sur l'agence de gestion de promotion des investissements, mais notre objectif était de vous partager les stratégies qui sont mises en place par les nouvelles autorités, n'est-ce pas, pour développer le Sénégal, parce que toute activité ou bien tout investissement qui devra être fait devrait être en cohérence avec ces stratégies. D'abord la vision 2050 qui a été déclinée un master plan, puis un plan quinquennal. J'ai oublié de vous dire également que pour le financement du plan quinquennal, il est prévu un besoin de financement de 18 500 milliards de francs CFA. 18 500 milliards de francs CFA, dont 5 700 milliards, n'est-ce pas, attendus du secteur privé sous forme de partenariat public-privé. Donc, la stratégie Vision 2050, à côté de cette stratégie, il y a des stratégies industrielles visant un petit peu à obtenir ou bien avoir une souveraineté industrielle et à transformer les produits issus de l'industrie extractive au Sénégal plutôt que de les exporter. Et enfin, une stratégie numérique visant à faire du Sénégal une société numérique, un pays de service à valeur ajoutée à l'horizon 2035. Voilà un peu ce que je voulais partager avec vous. Je reste à votre disposition. Cependant, sauf erreur de ma part, il y a un autre collègue qui est resté au Sénégal, qui est le spécialiste des questions de financement. Si tant est qu'il est connecté et qu'il y a des questions sur lesquelles il pourrait apporter sa contribution, donc il le fera le plaisir de le faire. Merci. Le premier intervenant, il n'y en a pas. Donc le deuxième intervenant.
You referenced the Pangea presentation this morning. Oh, sorry. You referenced the Pangea presentation this morning, which showed the growth rate almost halving from 8.4% or 8.8% down to 4%. Are you in agreement with that change, especially given the continued on stream of the oil and gas sector and some of the mining industries you talked about as well?
Désolé peut-être pour la traduction, j'ai raté quelque chose. Si la traduction peut revenir là-dessus rapidement. La traduction. Allez-y.
Show such a steep drop-off, especially given the continuing coming online of some of the oil and gas projects and some of the other projects you just mentioned.
Je vais essayer de répondre, même si je n'ai pas bien entendu la fin. L'idée, c'est que les 8,8%, c'est une projection. D'ailleurs, ça rejoint un tout petit peu la projection qui a été présentée ce matin par le premier intervenant des organisations internationales, notamment la Banque mondiale, qui ont toutes fait des projections à hauteur de 8%. Maintenant, cette projection à hauteur de 8% découle certainement des performances des années précédentes, sachant qu'en 2026, il est prévu une sorte de repli, n'est-ce pas, du fait un peu des performances qui seront réalisées en 2026.
Thank you very much for your presentation. You mentioned you have a colleague on the phone. Is that right? Who can speak to financial queries? Hello? Oh. Okay, great. Thank you. So my question is perhaps a tricky one, but I think it may be an elephant in this room with a few of my colleagues in our sector, which is regarding your relations with the IMF and handling the larger debt burden that you have inherited from the previous government. And I think everybody appreciates this is something that the new government has had to audit and now handle in a disciplined way. And I just was wondering if you could perhaps give us a sense of how the negotiations are developing with the IMF for a new program. Thank you.
Merci. Je ne sais pas si mon collègue il est là. Voilà, mon collègue Pape Moda est connecté. Il m'a fourni quelques informations tout à l'heure. Mais je propose qu'il intervienne directement parce qu'il participe aux négociations. Pape Moda.
Oui, bonjour. Bonjour, monsieur le conseiller technique. Est-ce que vous m'entendez?
Je pense qu'on t'entend. C'est bon.
Oui, parfait. Donc, je vais répondre à la question qui a été posée en anglais concernant les négociations avec le Fonds monétaire international et aussi avec les efforts de mobilisation de financement. So on that specific question, I would say that the engagement and the conversations with the IMF are going well, and they have been constructive so far. We hope in the next few weeks to be able for the IMF to go to board on the misreporting case, and in the next month or so, we should be able to finalize a new program, as was announced by the Minister of Finance and Budget. So I think there's a very strong alignment between what Senegal is doing and the reforms and the measures that the IMF is looking for us to implement as well. There's very clear alignment on the fiscal consolidation pathway. We have already started working on specific measures on energy subsidies, on rationalizing recurring expenditures, and also being more selective on investment projects in order to reduce our deficit level. So our target for this year is to bring down the deficit to 7%. Next year, we plan to reduce the deficit down to 5%, with an objective to reach 3% of deficit by 2027. Which is the sort of convergence criteria in the YMO region. And I think that's exactly what the IMF is looking forward for us to do. So we have alignment on that, and we are progressing on negotiating a new program. And with respect to our financing plan, we have been able to roll out our financing plan so far with great success. A couple of months ago, we had a large bond offering in the regional market where we raised close to 620 million euro. Yesterday, we have launched a new public bond offering in the regional market where we will raise at least 300 billion in local currency, in addition to other financing efforts that we are deploying with other partners as well. So we have a very resilient financing plan for the year, and obviously finalizing the discussions and the engagement with the IMF in the next few months will be also an important step for us, and we look forward to finalizing that.
That's been very helpful. Appreciate it. And applaud you on all those efforts.
Merci, Pape Moda. C'est bon? Voilà, donc je profite de l'occasion. Écoute, et pour les questions pertinentes que vous avez bien voulu poser. Donc, comme je l'ai dit tout à l'heure, nous restons à votre disposition, sachant qu'au-delà de la présentation que nous avons faite, il y a un certain nombre d'outils. Et le site que j'ai indiqué tout à l'heure, Invest Sénégal, géré par l'agence de promotion des exportations, peut être une porte d'entrée pour les investissements les investisseurs privés. Sur ce, je vous remercie.
Merci beaucoup, Monsieur Gay. Merci également au conseiller spécial auprès du ministre des Finances, Monsieur Papamoda Loum, qui nous a rejoint
en ligne. C'était très pertinent. Jeff. Donc le Sénégal, terre d'investissement également. Well, I'm going to switch to English now, as this brings us to the end of 3 extraordinary days here at the 25th ATIDI's annual general meetings. And before we say goodbye, it's my pleasure to now call for the last words Mr. Benjamin Mugisha, Chief Underwriting Officer at ATIDI. Let's all welcome Mr. Mugisha.
Thank you. Thank you so much. I think although we said we've come to the end, we actually just wanted to announce that there is still one thing to do, which is we have to see the lovely city of Luanda. So there's an excursion tomorrow. I hope you all received the email. And if you didn't, my colleagues at the back, Sheila and company will be more than happy to support through that process. We'll be meeting at 8:30 for those in this hotel and 8 o'clock for the hotels that partnered with us for this AGM. We'll be going round to see everything like Rwanda Bay, National Bank, Slavery Museum, and please make sure you're there. We'll then end that session with lunch at Texana restaurant. Don't worry about language. There will be someone to translate across all the languages that we know have been spoken by our guests. So we just wanted to say yes. It's the end of the round table, but it's not the end of the AGM. We still have the great opportunity to see the lovely city that we've been hosted in. Otherwise, on behalf of my CEO, the management at ATIDI, the board members, and the chairman, our shareholders who have sat through this session as well, and we thank them for that support, as well as on behalf of all of you, I'd like to, as I said at the beginning, start by, as we do as Africans, thanking our host for hosting us here in this very lovely place, and maybe we give them a round of applause for that. And then thank you. And then also to thank all of us who have been here. Thank you so much for the support. We look forward to seeing you again in the near future. I think we were all given an assignment recently to learn a few Spanish words, but I said to my colleagues, I'm very worried that I might say farewell, mucho, obrigado, and I say thank you, ciao. So I just want to say it's really been a pleasure learning about the culture of this place and for the hosting that you've done. And we hope to see you again in the near future. So ciao, which I know means bye-bye, and look forward to seeing you again in the near future. Thank you.